Currently, because of seasonality, there is weakness, but the brokerages are saying that the outlook is pretty strong. And if you have to look at a year-on-year basis, there is a little bit of strength there as well. So it's going to be an interesting one to watch out for. And in fact, we will be joined by the management of Sagility as well at 9:50 a.m. That's Ramesh Gopalan, Group CEO and MD, to discuss more on this. And very lastly, Gabriel India is the last one. Now, look at the acquisitions as well. The two acquisitions that they have announced are both EPS accretive. So first up, they've said they will be buying 28.99% stake in HL Mando Anand from promoter, and this is an inter-promoter transfer as well. The value is around 2,231 odd crores. It is a related party transaction because the stake is being purchased from the promoters, which is Asia Investment Private Limited. The company has said that they're looking to consolidate Anand Group's automotive businesses under the listed company, and HL Mando Anand India makes steerings, brakes and suspension systems for passenger vehicles. Now, the acquisition is going to be subject to regulatory approvals as well. Now, what they've said is that they will pay 350 odd crores in cash for the acquisition, whilst the remaining 1,880 odd crores will be settled by issuing preferential shares to Asia Investments. And as a part of the transaction, Gabriel will issue almost 1.4 crore shares to Asia Investment at an issue price of 1,305 per share. Post-allotment, the newly issued shares will represent 7.5% of Gabriel India's expanded share capital. And HL Mando Anand is a joint venture between South Korea's HL Mando Corporation, where HL Mando holds 71%, whereas Asia Investment owns remaining 29% stake in the JV. So this is going to be interesting to watch out for, because the kind of consolidation that they're looking at and the acquisitions that they're talking about, this is going to be EPS accretive as well from a business perspective. So watch out for Gabriel India.
So Gabriel known for shock absorbers in the two-wheeler space, right? And now the Anand Group, I think this has been happening.
Unlisted, yes, this is the unlisted entity that they have, and because they want to start consolidating in the automotive space, that's the reason why they are doing this entire transfer from the unlisted entity to the listed entity.
And this has been going on for a year or so, right? This whole plan to consolidate in the
absolutely.
Anand Group.
You know, on Anant Raj, as you were going through that story, Hiral, I'm wondering the excitement about that stock in the last few, I would say even a couple of years or even a few months, has been the data center play and that part of it. Now that they are going to demerge it, is that going to continue to be seen as a positive? Is just the pure real estate play going to be so interesting? So I think that's one to watch out for as well. So a lot to unpack for you. We're taking a very short break. We're coming back with Kuch Bora, Parag Thakkar and all the top stocks of the day. Don't go away.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026. 26 July. Only on NDTV. India Inc.'s most respected names. chose India's best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV.
Welcome back to watching India Market Open. Let's pull up the implied very quickly, and you're going to see maybe a bit of a dull day in the market. So will it be an 80-point gap down with Brent at 92? I wouldn't be surprised, but I must tell you, we here at NDTV Profit are very, very excited about what's going to be happening this weekend. The Business Leadership Awards will be front and center. Finance Minister Nirmala Sitharaman will be giving out those awards. We have a stellar jury which has selected the winners. It's the who's who of corporate India. That entire show will be live. Don't forget to watch it. We'll keep reminding you about it over the next few days as well. Parag Thakkar and Kush Bora in our studios this morning. Very warm welcome to you. Especially congratulations to everyone who made it through the terrible rains this morning. It was quite an ordeal. Mumbaikars hang in there. But it's not raining good news in the markets, Kush.
It's not, but it's not so bad also.
Yeah. I mean, 92 on the Brent.
Yeah.
Nothing stellar and exciting to celebrate. No real inherent strength being seen. I mean, we can just take at least some relief from the fact that और नहीं टूट रहे हैं.
Precisely. That's the point. I won't be surprised अगर थोड़ा और down day होगा तो. But I know the football World Cup just got over. But just to give a reference, ये थोड़ा सा ना own goal वाला scene हो गया. Banking and all was something that everyone was banking on. Pardon the pun. ठीक है. लेकिन जो results थोड़े से disappoint किए, that could perhaps temper, the momentum in the markets. And as we are seeing right now, we take heart from the fact that the supports aren't being tested yet. Just yet. I won't be surprised if we have a down day today, 80, 70, 80 points on the gift right now. It could slip a little lower.
Own goal किसका था?
हमारा ही ना, HDFC Bank and the rest of the pack. थोड़ा पॉजिटिव दे देते तो यहाँ से ब्रेकआउट आ जाता बहुत क्लियरली.
No, so own goal हमारा क्यों? You mean the companies itself?
No. So what I mean is that for the most part we've said that the Indian markets haven't rallied because of a lot of external reasons. हमारे growth reasons भी थे, but we were setting up well.
Yeah.
अगर रिजल्ट्स अच्छा आ जाता तो चल जाते. तो इस बार हमारे रिजल्ट्स के रीजन की वजह से ये ब्रेकआउट नहीं आया.
Yeah. No, so I think there was a bit of overt optimism about not having any impact at all on companies' performances, and this is what happens when you're depending so much on one hero. Right, the amount of focus on HDFC Bank and the amount it pulls. I was seeing someone's calculation that was done that HDFC Bank could be responsible for 40% of pulling down the Nifty over the last few months. This is a back of the envelope calculation. I'm not doing it. Someone else has done it. But that kind of overt dependence on one or two players is what is the problem with us.
That is what is keeping the bank Nifty from actually breaking out. If you see the rest of the pack, they've had their fits and starts, they've had their moments. In fact, ICICI Bank's been an outlier, right? It's just because of this heavyweight not really doing its thing, not coming to the party, that is actually spoiling the whole setup. Also, by the way, one of the reasons why I see that today could be a down day, a rather interesting one. For the last couple of sessions, we've been talking about how the PCR has been very heavy, and that is why Nifty might not go up. In fact, that just might have been the reason why the Nifty didn't crack big time. You know why? Because just ahead of the results on Friday, there was massive put writing on 24,000, 24,100, 24,200. Now with the expiry yesterday, weekly expiry, that's been reset. And you're seeing shorts being built on Nifty and on Bank Nifty. You're seeing call writing returns. So 24,000 call, 24,200 call option has started to see some writing. So I think immediate upsides on Nifty and Bank Nifty are a little unlikely. Take out from the fact that SMIDs are now coming to the party once again. Don't look at the index. The breadth is okay, still in favor of advances. But once you see any kind of pickup in that for a day or two, that's when the portfolios will start to look good. So for now, if you have long positions on Nifty, continue to hold 23,800, 24,000 remain as stop losses. On Bank Nifty, 57, 300 remain as stop losses. I wouldn't suggest creating fresh longs on Nifty and Bank Nifty just yet.
Okay, and what about individual stocks? Because through the week so far, at least the first couple of days, you've been a little cautious.
I continue to remain cautious, but that's turning into slight optimism, largely because not what these small and the mid-cap indices have been doing, but with the kind of breadth. The declines are still in that 13 to 1500 range, not to my comfort, but at least the advances are higher, so I'll take heart from that. So things starting to improve, but we haven't seen that kind of a breakout that I would love, especially in the split segment. So caution remains, but yeah, the tide slightly turning in the favor of starting to bank on stocks. Today again we've got two stocks for you, both of them on the long side. One of them is Karnataka Bank, one stock that has not really participated in the recent up move, but has been consolidating, ended at the high point of the day above that 275 280 resistance level, so could have a good day today or in the coming days. So 289 300, these are your targets. 272 is where you keep that stop loss. The other one is FIAM Industries. Here too we've seen good traction, good volume accumulation in the last 4 sessions, so for targets of 2405 and 2480 with a stop loss at 2260. Just a quick update on this one, which is Gujarat Fluoro. The pick of the week, the weekly pick, has gone on and hit target 2 in just 2 or 3 sessions, right? So 10% upside on this one. If you have, by the way, you could book partially right now, hold the rest with 45, 45, 50 as your trailing stop loss, given the kind of closure that it had and the kind of volume build up it's still seeing. Or if you just want to have an early weekend, book all of it and enjoy.
Book all of it and enjoy. Okay, we have a deep dive on Gujarat Fluoro coming up that our research team has put together ahead on the show. So stay tuned for that. That'll be an interesting one to see. Parag bhai, so much to unpack. I'm going to start a bit by getting your view on Bandhan Bank. Okay. Because I think that could end up being the accident of the morning and will be a pain point. I think that's something that Alex highlighted in his watch list as well. But essentially, they've cut their guidance. Their return on asset guidance has been cut by 40 basis points to 1.2 to 1.4% for FY27. Return on assets guidance was cut due to macro uncertainty and margin pressure. Margins can be seen, can see an impact of higher funding costs. Earlier aspiration of NIMs at 6.5% by Q4 FY27 has become challenging, is what they are saying. Now, I have 2 questions. Is this a Bandhan Bank problem? Is this also indicative of what maybe that space is seeing? Because they're talking about external factors that have caused them to reduce their guidance. And what is the impact you're expecting on Bandhan?
So the stock has already rallied 19% I think in last. So I would say that there will be a good correction because ROA guidance is very steep. ROA cut guidance is very steep. And it is led by NIM and OPEX. So OPEX is definitely Bandhan's own thing, right? They are investing behind technology and all, so they are cutting. But they should have figured out before, right? Before giving that higher guidance of return on assets. Because technology investment is not suddenly you decide to do, right? So that is one thing. And of course, the other thing is for everyone that cost of funds have gone up. We have seen NIM compressions in HDFC Axis also, which can happen with any other bank, which is Bandhan also. So I would say that it is partly their own thing and partly, but I think the earlier guidance which they had given was very, very, I would say, optimistic.
But there is also the statement that they've made on going slow on EEB, which is their emerging entrepreneur borrowing, basically lending to micro companies, right? And they're saying that they want to focus on secured. So in the quarter gone by, 27% growth in the secured book. They pushed it to 57% of the total, but it's still about 43% that's unsecured.
Absolutely. So that is why I always say, right? I always say that I always prefer secured lenders.
Sure.
Unsecured lending gives you very good profits at the upfront. For 2-3 quarters look phenomenal. Then there is accident after some time. So Bandhan has already gone through accident. Now it was recovering. Actually out of that accident, but now they have because that guidance which earlier they gave was very, very optimistic, I feel. Now they are coming to realistic things.
So if there is a cut today, would you look at accumulation? It's a stay away all through and through. Kush, on the charts as well for Bandhan?
So Parag, just as data, in the last 4 months, the stock is up nearly 48%. So the run-ups already happened, and if there isn't a follow-through in terms of news and in price action, I think 190, 195, these are the support zones, could well come into being tested today. I wouldn't really buy into it just yet.
190, though, we might see that at the start itself.
Perfect.
Based on
in terms of the guidance cut that has come in.
Yeah.
But if you have to just look at the financials, another company that I want to talk to you about is M&M Finance. The numbers are very strong. I mean, if you see the chart in terms of yesterday's session, a good spike that did come in towards that last 20 minutes of trade. Are you seeing further strength push in terms of the charts today as well?
This is a very interesting setup. Despite the spike that we saw yesterday, it's not close to overheating, volume backed up moves, 200-day moving average taken out. My only thing is that it struggled around the 200-day moving average for the good part of the last 1 month. So if it is able to sustain above the 330, 335 levels, continue building onto them, then I think positionally this still remains a good buy. So I wouldn't buy into it today, but with a stop loss around that 330 mark, I would actually hold M&M Financial Services. This is a good setup.
Okay, so M&M Financial Services, a good setup on the technicals as well. But pharma as a sector that is going to be in focus, in my opinion, and this is because the Trump administration has proposed a phased tariff plan on generic drug imports, keeping tariffs at 0 for 2 years before potentially raising them to 100% and later to 100%. Varsha is here with all the details and the impact. Varsha, we've spoken about this quite a lot of times in terms of tariffs are coming, tariffs are not coming, and again we're hearing about 100% and then a 200% in a phased manner. What does this announcement actually mean for the generic players in India, and which are the companies that stand to get impacted?
Yes, so first of all, yes, we might see some kind of sentimental impact today, considering the tariffs that have been announced by Trump. Now overall, if you see, tariff could rise to 100% in year 3, and tariffs could further rise to 200% thereafter. So no tariffs for first 2 years. So Trump is actually giving a window to pharma companies to go and set up their manufacturing base in US. Now also let's talk about companies, pharma companies with highest US exposure. You have Granules India, wherein 76% of contribution is from US. You have Lupin at 42%, Torrent Pharma at 10%, very little contribution, Zydus Life at 40%, Gland Pharma 53%. So whole lot of companies have actually presence or a contribution coming from US. Now let's talk about companies which already have plants in US and might not have that much of impact. You have Aurobindo Pharma, wherein they have meaningful manufacturing presence in US, a better position if domestic US production is incentivized, and they are the potential beneficiary if policy is implemented. You have Sun Pharmaceutical Industries, wherein they've acquired US-based healthcare firm which is Organon, so we might not see some kind of impact there. Sunrise Pharma has already US manufacturing exposure, could gain from preference for local manufacturing. Which all companies might see some kind of pressure? One is of course Dr. Reddy's, you have Cipla, you have Zydus. Why? They do have US manufacturing footprint, but still depend meaningfully from India based production, and could face sentimentally negative reaction over there. Biocon, if you see, biosimilars and generics are largely supplied from India and Malaysia, so you have some kind of pressure there also. If tariff eventually materialize, there will be neutral impact on two companies. One is of course Alkem Pharma, wherein largely dependent on Indian manufacturing. US generics is not a core problem for the company. Torrent Pharma, very limited earnings dependence on US generics, almost 9 to 10% coming from US in FY26. So overall, yes, we might see some kind of sentimental impact, but Trump has given that 2 years of window to go and set up the manufacturing base in US, and many companies are actually setting up their base in US.
All right. Thanks so much, Varsha. In fact, we were having this conversation this morning, Parag Bhai, and we were debating between the three of us whether or not these companies would actually go ahead and set up meaningful capacity and shift manufacturing from here to there. So first of all, from a company's perspective, we already put the money in here. They've got legacy here, and they've got employees here. And from the government's perspective, let's not forget that this is a major export from India. So why would the government be okay with that taking place as well? So do you see a material shift taking place, or do you see any cuts as opportunities to pick up selectively?
So my view has been, Alex, you know that I like domestic formulation, branded formulation like Torrent Pharmas of the world or Mankind's of the world or Emcure Pharmas of the world. We have discussed these stocks, and Torrent Pharma has now gone up too much, so let's leave that. But so if there is a big fall due to this announcement, sentimental fall in stocks like Mankind Pharma or Emcure Pharma, it will be a great opportunity to buy, in my view.
But you would still stay away from the
generics. See, first of all, stocks like Aurobindo and all have already gone up. Lupin, for example, has already gone up. Only the stocks which have not gone up is Dr. Reddy in this pack. Zydus Life has also done reasonably well. So there is no need to buy right now in these stocks, even if they fall say 3-4%. There is only one stock, Sun Pharma, which you can buy if there is a dip, because Sun Pharma US generic business hardly gets any value also, plus it is only 20% of the revenues. The major profits are domestic and specialty.
So, okay, you know, the question over here that I have is, Parag bhai, this announcement does somewhere become positive for companies who have a footprint in the US markets. So for example, you have Aurobindo, which has presence in the US market. You talk about a Zydus, they have presence in the US market as well. Dr. Reddy's, Lupin, Cipla, these are few of the names which have manufacturing bases already set up in the US market right now. Does this become a game where it becomes Indian companies who have a base, in the US markets probably will not see that kind of a negative reaction. However, you have names like Torrent Pharma, Alchem Labs, who are exporting to the US, but they are fully dependent in terms of Indian, manufacturing. Biocon, which is dependent on India and Malaysia to that extent. So these are the ones which stand to lose then.
I would say that, see, it depends on company to company, like which company has which plant where and how much it contributes to the revenue. You might be having a US plant in US, but that might be contributing very less to your total US revenues. So you have to go company by company. But generally, in my view, it is the US generic space as such has rallied. So I would stay away from it, and I always loved domestic branded formulation franchise, which is mainly chronic, and so that is why my picks are very clear in this space right now.
Okay, all right.
On the charts? Can't miss that one, because 15% is the kind of returns that the pharma index has given in 2026 so far, so it is one of the outliers, and you are seeing, that defensive play which is already coming in there.
My question is tariffs. What tariffs? They are going to be implemented 2 years from now. Who knows 2 days later what post and what changes are going to come about, right? I am going to completely ignore this news. Plus one to Parag bhai कि अगर इसकी वजह से किसी भी stock में dip आता है, then it's a buying opportunity. My shopping list on this one's very clear. Shilpa Medicare, Ajanta Pharma, these we've spoken as the top picks. Senores is at 20-day moving average, has a tendency of rebounding from those levels. So yeah, any dip because of this in any of the pharma stocks should be taken as an opportunity to go along. Very clear.
Yeah, I agree with you. I think this is a bit of a non-issue when it comes to the health of pharma stocks. We've seen it play out time and again. What is definitely something which should be on your radar and plays out time and again is whatever is on Sumit Sarkar's list when he presents what he's heard on the street. Sumit, what do you have for us this morning?
Well, given that it's earnings season, the first set of stock is based on that: IndusInd Bank, Bajaj Finance and Manappuram Finance. Now there are buy flows on the large HNI and the PMS desk, and dealers are expecting strong set of numbers from all the three companies here. For Paytm, there are sell flows on the PMS desk. There's a buzz of a potential block deal that could happen very soon, and hence, despite a strong set of numbers, the stock was down nearly 3.5% in trade yesterday. For Thermax, there are buy flows on institutional desk. Dealers are expecting a positive note from a broking firm to come in very soon. And couple of stocks that we did indicate earlier. Bandhan Bank was part of a segment yesterday where we did indicate that weak Q1 earnings is something that is expected. And yesterday on the conference call, the management has cut their ROA guidance for FY27. So that is one thing that could see a negative reaction in trade. And Gabriel India was part of a segment June 19, a month back, where we did indicate that there is some M&A activity that is in work which could be positive for the counter. And yesterday they have announced some stake acquisition in one of their associate companies, which as per analysts could be EPS accretive and positive for the stock. So keep an eye out for Gabriel India as well.
Okay, Gabriel India and Focus. Gabriel India has also reported. Is that something that you have seen, Parag, by Gabriel India on Focus?
So the stock looks expensive right now because right now the full consolidation impact we have not seen in profits. Once they fully consolidate, we'll get to know what is the P multiple and all. But whatever they are doing is absolutely minority shareholder friendly. Because they are consolidating all unlisted entities into a listed entity, and so all the profits will be here, or entire focus will be here. So it's a great thing which they are doing, and the Gabriel shareholders have been rewarded handsomely. The stock has moved up from 250 where I was watching it, and now it is 1488. So it has done phenomenally well due to this consolidation.
Okay, we still have Somit with us, putting the focus on GAIL after a key regulatory change from the Petroleum and Natural Gas Regulatory Board. Somit, what are you hearing?
Well, the notification has come in, and the clear understanding of this notification is that the earlier clause which required GAIL to separate its transmission and the marketing business has now been omitted. So PNGRB has omitted this clause of legal separation of the transmission business and the marketing business. Now, as you know, GAIL operates in both the businesses. They have a transmission business to the extensive network of pipeline that they have across India, and when it comes to the marketing business, they also have that because they get gas from various other countries and sell it in the country. So earlier, as per PNGRB, there was a conflict in both the businesses, and hence there was a requirement to separate both these businesses. But the recent notification says that there is no such requirement, and going forward GAIL can operate as a full entity which will have both the transmission and the marketing business. So a major overhang goes out for GAIL India at this moment, given the fact that they do not have to separate the transmission and marketing businesses. Now, why this was an overhang? Because as per GAIL, both the businesses are complementary and need to operate together, because transmission business provides a steady flow of income while marketing was a bit of volatile business, and hence both these businesses remaining together was important, and that now goes ahead for GAIL, and hence a major overhang moves out for the company.
Got it. Thanks so much, Somit, for that. And Parag bhai, your initial thoughts, he's explained it already in a way that I think everybody can understand if they don't track the oil and gas space specifically. But your thoughts on GAIL?
No, so I'm sorry, I did not listen to what he said, so I'll pass it. But the stock is undervalued, but it has PNGRB related things. They did not agree to the tariff hike which they asked for. That was the overhang. So if that overhang is going to get removed, and if there is some positive there, the stock can get re-rated.
Now, so I want to talk to you now about the two-wheeler majors. Bajaj Auto and TVS have both reported. We all know how you feel about Bajaj Auto. I think a lot of that has been proven correct. Unlike another stock that you really like, and the results may have not been up to par. But we'll talk about HDFC Bank in more detail at 9:30 this morning. A quick reminder there, we're going to do a deep dive on HDFC Bank. We'll have Parag Thakkar, we'll have Abhijit Divanji, and we'll talk about what's ailing India's largest private bank. But to talk about Bajaj Auto over here, I think they've lived up to expectations. How do you now look at a Bajaj Auto versus a TVS?
So I'll say, see, both are great companies. So I'll not put to one company versus other company. The fact that today I'm buying Bajaj Auto, this is because Bajaj Auto trades at cheaper valuations. One, Bajaj. So I'll say, see, both are great companies. So I'll not put to one company versus other company. The fact that today I'm buying Bajaj Auto, this is because Bajaj Auto trades at cheaper valuation due to buyback. And third, most importantly, is many people have ignored this fact that when there is a buyback and promoter can get a check of 3,000 crore at 12,000 rupees, which was 20% above that prevailing price, and he is not taking that check of 3,000 crores, right? One of that is a tax reason, because promoters are taxed heavily when they tender in the buyback. But the second reason is that the intrinsic value according to promoter is much higher. And that is proved, right? Exports and EV, I'll tell you, a lot of people focus on the domestic business, domestic two-wheeler business. Now that is just 25% of the overall business. 40% is exports, where they make more than 20% EBITDA margin, which is their company average margin. So, and that exports is roaring. 2.5 lakh vehicles per month they are saying, and Mr. Rakesh Sharma has on record said that it can go up to 3 lakh per month if the logistic issues.
So we are going to be speaking to Mr. Rakesh Sharma today. What is the one thing that you'd want to know from him?
So basically, see, I'll tell you, I am completely happy with the company. I want to share it with him. With the way they distribute money to shareholders is crazy.
Compliments are aside. We have to ask questions.
So I'll come to that. Most of the domestic investors or analyst community is who are negative on Bajaj Auto are just due to one reason, which is domestic market share of two-wheelers, right? So if they are and they have said on the call that they are going to have 10 launches by March 27. And within next 2 months also, you will see many launches in 125cc to 160cc, which are refreshers, right? So they are going to take action on that. What is their expectation of the market share increase once they have taken these actions is something which everybody would want to ask. Although it is irrelevant according to me, because it is only 25% of the revenues and hardly any profit comes from there. From where Bajaj Auto makes money? Exports. Right now, three-wheelers, domestic, three-wheelers, they are saying that they are making more than double-digit EBITDA margin in EV also. Right? In Chetak, they are EBITDA positive now. And in Chetak and electric three-wheelers, they are actually facing capacity constraints. They have to
You buy
expand.
right now at this rate?
Yeah, I am a buyer.
Okay.
On this table, I can buy.
Okay.
Yeah.
All right. Now that is even one step beyond table thumping. That's table buying. Puneet joining in with what brokerages are saying on Bajaj Auto. Are they reflecting, Puneet, the optimism we're hearing from Parag Thakkar this morning?
Well, most certainly, a few of them have high target prices, and this is after a really long time, right? Because we've seen, as Parag bhai mentioned, that the domestic market share continues to be under pressure, and that has been a pain point for analysts as well. But Jefferies has hiked the target price today to 11,500 versus 10,500 earlier, and they feel that despite a very severe commodity headwinds that this quarter faced, we've seen almost 110 basis point EBITDA margin increase. So that's positive number one. The other factor that the two new bike launches also will be very key, and most certainly it will be in the 125cc segment that is distributed between Q1 and Q4. But 10 new launches by September 2026 will be key for the company, as mentioned, and they've actually raised the estimates by 6 to 8%. City, on the other hand, slightly more, wouldn't say negative, but cognizant of what's happening in the domestic market share, because for the last 3 years, you've actually seen a reduction in market share for the company in the domestic side. So they feel like while the demand outlook is positive, there are challenges persisting at this point of time for Bajaj Auto in the domestic market, and they feel that a continuous decline in the wholesale market share currently is a concern. So a lot of impetus on the model portfolio and the revamp of the same, but the timeline as well as the management is very positive in terms of the new launches. Earlier they had mentioned one new launch, now they've increased it to 2 for this year, so that'll be something to watch.
Okay. 2 for this year. So launches is in focus, Bajaj Auto in focus, but let's talk about a few others that you might see some action. JSW Infra also a decent set of numbers. Revenue is up 18%, EBITDA up about 16%, and margins though have been flat to negative, I would say 46.6% versus 47.5%. Net profits also down about 10% for the quarter. We're going to see first rates coming in, and we'll see where JSW Infra hits. But is this a set of numbers you've looked at, Parag bhai? JSW Infra, any interest?
So I have clearly said that, right, when we discussed it around 300, when there was a QIP going on, that this is a FY28 story. The entire big scale up is going to happen in FY28 only. So anybody who is buying has to have a long term view. It is good that we got 15% very quickly, but from here on it is a 2-year story for sure. Because the largest jump in EBITDA is going to come from that slurry pipeline at Orissa, which connects JSW steel plant at Orissa, and that will give them 830 crore EBITDA, and that is going to start in FY28.
Aavas Financiers is also one that I want to just quickly look at. They reported as well, and we'll see how Aavas Financiers is doing this morning. The first tick is about 3% up, and in that BFSI pack, the numbers didn't seem half bad. But let's look at M&M Finance. Is it continuing its momentum second day in a row? That's another one which had a decent set of numbers, and Bandhan Bank obviously would be the big one to look at this morning. I'm seeing a 10% cut on the screen right now. We'll see if this settles at all. You have a Zydus Life Sciences also not doing too well, nor is a Bharat Forge. The Nifty and the Sensex by themselves are not too bad compared to what we had expected. Trident also another good set of numbers, and Trident stock should be in focus as well, just about 4% up. But look at all of your pharma companies, your Janta, Cipla, they're all doing okay this morning. Not too much stress over there at all. Trident on the charts, If you have a view there, Kush, and if you can just quickly look at that for us, we should look at some of those, and Aavas Financiers also, if you have an opportunity.
So a Trident is not going anywhere, wouldn't really buy into it. I mean, if I had a position, if I got a bump up today, I would actually look at exiting, the stock 26, that 200 DMA is proving to be a stiff resistance, stop loss around 24.50 mark. I would actually look at exiting Trident. Aavas Financiers, you can continue to hold. There is an uptick, major resistance at about 15.25 thereabouts. So if it does open above that and is able to sustain, then you can see a continuation of this move that started somewhere early June. So Aavas Financiers is a hold with a stop loss around the 14.50 mark, but Trident, I think you should exit if you do get closer to 26 levels.
Okay, Chandan Taparia joining this morning. He's head technical and derivatives research at MOFSL. Chandan, very good morning to you. Let's get your Nifty check and your Bank Nifty check to start with.
Good morning, Tamanna. Thanks for having me. So Nifty got stuck in a range. Somehow we are witnessing a narrow range price formation. In fact, the narrow range 3 or narrow range 7 is being formed, which clearly indicates that absence of follow-up is missing at higher levels even after the sustained buying at lower levels. And I believe the more market consolidate, it will get the sign for next leg of rally. Sense of follow-up is missing at higher levels even after the sustained buying at lower levels. And I believe the more market consolidate, it will get the sign for next leg of rally. But as of now, we have to deal with whatever the market is all about. The broader trading range is now as of buy on decline strengths with the view that it's going to be in a broader range where support-based buying could emerge. So one can keep the support near 24,000 and capture this trading band between 24,350 to 24,444 on the higher side. Looking at the Bank Nifty index, on Friday it gave a breakout, but the momentum fizzled out due to the weakness in HDFC Bank. But at the same time, IndusInd and ICICI Bank managed to hold at higher level. So likely to be in a broader range. As of now, 57,300 is major support, while on the upside hurdle is at 58,250. So both the indices are likely to be in a broader range, but as immediate setup is positive with some consolidation, so we'll go with buy on decline kind of view in the market as of now.
So Chandan, we are talking about Bank Nifty since quite a lot of days in terms of the divergence that's happening between the PSUs and the private banks as well. However, at this hour, what would your top picks be for trade today?
Yeah, so yes, when you talk about the private versus PSU, in fact, private banks were doing well, but in last 2 days, we witnessed some recovery in PSU bank, mainly counter like Union Bank and SBI, but I believe private banks are likely to take a lead. If you ask me the sector-wise, 3 sectors are on radar on this morning. First is going to be on the Nifty Chemical Index, which gave a major breakout. Second is Nifty India Defense, and third is the Nifty Realty. So first trade will be from the Realty pack. Here I'll suggest to go long on Godrej Property. It has given a consolidation breakout. In fact, a positive price pattern similar to pole and flag pattern. It has spent a consolidative move last 5-7 days, has been making a high top, high bottom on weekly chart. So one can buy Godrej Property with support of 2120. We are looking for an upside target towards 2250. Second trading idea, that is buy on Rain Industry. This mid-cap counter has seen the strong momentum. In fact, has been making the positive price pattern with hold of rising trend line. Looking for the fresh leg of rally, so one can buy Rain with support of 214. Looking for an upside target towards 233. So Godrej Property from real estate peg and Rain Industry from mid-cap peg looks good for 3 to 5 and more percentage from current zone.
Right. We were talking about Bandhan Bank in the run-up to a market open, and it seems like it's going to have a bad morning, as this was expected to take place. But we were talking to Kush Bora, and in case you missed it, the levels that he was talking about are 190, 195. Those were the support levels. It seems like it's going to open below that. And so therefore, what are the levels that you would watch out for on the downside?
So below 90, the next major band of support is at 165, 170. And again, the reason I say that is, that you don't buy into Bandhan Bank even on a decline like this, because amongst the smaller names you have so many choices in banks. Parag bhai spoken about the big banks quite often, but if you look at the smaller rung, South Indian Bank, J&K Bank, Maharashtra Bank, Tamil Nadu Mercantile Bank. Some of these names have done fabulously well in the last few sessions. So if I do get any dips in some of these names, I would prefer to buy these. There's been a fairly healthy institutional activity in some of these names. Price action also very positive. So Bandhan Bank, even at such declines, doesn't really make the cut. So focus on some of the other names. KTK Bank, Karnataka Bank is something that we've obviously discussed today and given out as a call.
Yeah, I think Bandhan Bank, the question will be whether to exit in this panic or not, more than buy on declines. All right, very quickly going through what should be on your radar this morning as we are wrapping up the pre-open session. Let's take a look at the crude sensitives. Remember, Brent at 92, ONGC Oil India, it's good for them. Brent is at a 5-week high. Want to take a look at how some of those stocks are doing, frankly, and that will be interesting to watch right now. Let's look to ONGC Oil India. It's good for them. Brent is at a 5-week high. Want to take a look at how some of those stocks are doing, frankly, and that will be interesting to watch right now. Let's look at ONGC and Oil India. Let's look at pharma stocks, Oil India, both of them in the positive. I want to look at IHCL. I want to look at JSW Infra. I want to look at Scient DLM and how they are doing. Decent set of numbers. Suntech Realty as well. JSW Infra actually 3% down right now. Scient DLM not getting a rate yet. Suntech Realty is also flat. Let's look at Canara Robeco AMC. We know Bandhan is going to be having a rough start to the morning. Canara Robeco actually 6% up. I want to look at Anthem Bio as well. Bandhan, of course, 10% down. Anthem Bio, Sagility. Let's look at some of those stocks right now. Anthem Bio was not a great set of numbers. Sagility was decent. Anant Raj will be demerging its cloud business. Street has seen it as a positive because they want to get a piece of the pie. Gabriel will be acquiring 29% stake in HL Mando. That stock is about 3% down right now. And there's a company called Viyash Scientific, which will be acquiring 100% of Bio4Life Italia for 17 million euros. I wonder if we have that stock and we can show it. That's about 0.62% up. So those are some of the movers. But Sharad joining in with a big brokerage call this morning. What's on your focus, Sharad?
Well, Tamanna, it's largely an NBFC, M&M Financial. The numbers came, during the market hours, but looking at the momentum in the NBFC stocks have taken this, and the brokerages have actually increased the target prices. Morgan Stanley has increased the target price from 335 to 370 rupees, and they have stated that the EPS hike is also expected to come in for the next 3 odd years. Largely, they are expecting that the macro risks are behind, and the cyclicality which will be there might be a re-rating scope going ahead as well. Also, looking at Jefferies, they have hiked the target price from 325 to 365 rupees per share, and they expect a gradual growth in the AUM, but the names will remain range bound, and tech and management initiatives might improve the underwriting going ahead. Valuations seem reasonable right now, and that is why the bullishness is coming in from the broking houses on M&M Financial Services.
M&M Finance on charts.
Okay, so M&M Finance, if you are talking, then I believe the counter has really seen good attraction on the last trading session. Exactly took support at 50 EMA. Recently, it completed a double bottom kind of pattern with a decisive hold above 338. On last day, it rallied by more than 8%. Looks quite promising as of now, looking at the price pattern. In fact, it formed a cup and handle pattern, which has a bullish implication. So looking for next leg of rally, one can buy at current zone or buy on any small dip with support of 338, looking for an upside target towards 365 and all. And again, in previous recommendation, I gave buy on rain, where we are looking for a target towards 233, 240 kind of levels.
With regards to a couple of names that Chandan still likes, Trade Industries is talking about, Pharma, Dr. Reddy's, Sun Pharma, Biocon. Let's just pull up all the 3 names and see what they are doing, because there is a little bit of divergence coming in there, but these are the ones which are seeing a mild bit of pressure here. Chandan, on the charts, would you take this as a buying opportunity?
Yeah, so if you look at the selective sector, as I mentioned, that selective pharma counters looking good. And if you ask me, this is the market where we have to be very selective, because this is not the market where entire market and the sector and the stocks will do well. So in pharma, if I look at the Sun Pharma, it has been forming higher tops, higher bottom on the weekly chart, but momentum is slow. So comparatively, I'll go with counter like Lupin and Loras Lab in the pharma space. But yes, if someone looking for Sun Pharma, use the support near 1920 for an upside move towards 2020 marks. So Sun Pharma also looks good, but as of now, Loras and looks more promising for next momentum in the market.
You know, one more reason to not be too worried about this, because if this is going to come in 2 years, Trump will at that time be at the fag end of his own, not where will he be? He'll possibly be in the White House still, but he'll be at the fag end of his presidency, and technically he cannot come back. Now, the if and but we don't know, but I mean, this is not something to be too stressed about, is what I would say, in case you're seeing it. So yeah, maybe look at buying opportunities if there's a specific
you
stock.
set up some foundation stone somewhere and set up one small piddly factory over there. Just to make
2 years में कौन पूछेगा? With US presidents, usually it's a diminishing return the closer you get to the end date of your tenure. So that's the one to look at. I want to see what the big banks are doing this morning, frankly, because the bank nifty is looking better than it has for the last couple of sessions. Let's look at HDFC Bank, ICICI Bank, Axis, and Kotak. Let's look at all of those which have been giving the market a little heartburn since their results last weekend and what they're doing right now. Kotak still about 0.43% down. And you know, that really is the big question. Would you buy any of these right now, Chandan, the mainline, frontline private sector banks?
So in mainline, frontline, I'll better to go with IndusInd Bank, which gave a breakout from a triangle and the pole and flag. However, already we have seen good run up, but I believe this counter is likely to do well. With support of 1040, we are looking for an upside target towards 1095 to 1100. And Federal Bank could be other name which has seen the strong momentum for the result. I believe such move could continue as counter has been outperforming and making high tops, high bottom on weekly and monthly chart. With support of 345, looking for 370 kind of level. So those who are holding can continue. Those who are looking to buy can use a small dip to buy. So I'll focus on IndusInd Bank and Federal Bank in the banking space.
Let me ask Kush, what do you think about Bajaj Auto? Because it seems like it's going to open higher today. Yesterday it saw a little bit of selling pressure, but it may open gap up today.
Yeah, views very similar to what it was yesterday. The trends positive, near term, medium term, all of that. The 10,800 resistance level, that's the one that I'm looking at. If that is taken out, I think you're in good stead. The stock will actually gain traction from here. 12,000 and higher levels positionally very much on the card. So I remain constructive. Yesterday's dip should have been taken as an opportunity to go long. If not, you could still go long. Major momentum will return once the stock crosses 10,800.
Chandan, 20 seconds. What stock are you spotting from the pre-open rate that you've not spoken about so far?
Yeah, I've not spoken so far. I'll focus on the J&K banks. Look positive, looking for next leg of rally. With support of 182, look for an upside target towards 195, 198.
The results as well, I think. Kush, anything that you're spotting?
Let me give the picks of banking flavor. Karnataka Bank we've already spoken of, so let's go with that. 289, 300 targets, 272 your stop loss.
Okay, so banks in focus, but not the top ones. Expect crude sensitives in focus as we open today. Brent at 92 and no signs of relief there. We may just buck the trend that the implied open was showing us. We'll have to wait and see. Are we opening with an 80-point gap down? At least the pre-open session does not seem to suggest so. We may have a broader market which is also performing better, but here are the first ticks coming in this Wednesday morning, and there you have it, 39 points down, so definitely better than what was being suggested in your implied open. The advance decline ratio also not half bad, skewed in favor of the advances right now. The bank nifty about 0.2% down, but I will look at what's happening with the mid cap and the small cap, pretty much flat, so not too bad, like we said. Let's pull up the nifty heat map for you this morning, and then we'll pull up the India VIX as well. Bajaj Auto is the star of the show. Second day in a row, Eternal is going to be reporting today. I think this is going to be an avidly watched set of numbers coming in from Eternal after so many changes recently in its management and what it's been doing. Blinkit has been pulling far ahead of competition. Does it continue to maintain that momentum? ONGC with Brent at 92. This is good news for an ONGC. That's why you're seeing it there. But more red now on the screen, which can be seen. And the biggest loser is Indigo, because a key component of its raw material, its fuel prices, will go up with what's happening with Brent prices. Cipla, Sun Pharma, DRL seeing a bit of pressure because of Trump's plan to impose tariffs on generics 2 years from now. Is this an opportunity to buy, is what you should be asking yourself. I think IT is having a bit of a down day. Infosys, Tech Mahindra not looking so great. HDFC Bank continues to be in the bottom list over there and seeing a bit of pressure, but relatively okay. Bajaj Auto, definitely the star of the show and the only one going from strength to strength this morning more than anything else. And of course, India VIX also climbing up, Alex, now at this point about 3.5% up. It's individual stocks which are showing momentum and the breadth of the market not looking half bad.
Not too bad. But again, it's those heavyweights that are proving to be a drag and continue to be the reason why the benchmark is not heading anywhere anytime fast. But let's take a look at the broader markets very quickly. Actually, in fact, let's take a look at the sectoral indices. Okay, let's finish off with the mid-cap index, just about 0.1% lower. I wonder whether, like you've seen in the recent past over the course of the last few days, you will see buying at lower levels, and later in the second half of the session you see a different picture emerge. But take a look at the sectoral heat map for the market as things stand right now. Auto looking okay, understandably so, because of the way that Bajaj Auto is doing this morning. Not too much in the way of other big sectoral winners. The defense back up about 0.2%. At the bottom you have pharma, so there is a tad bit of pressure. I wonder whether there is an opportunity to buy into any individual stocks. We'll check soon enough. Healthcare is losing ground about 1.4% or so. IT is down about 1% or so. Private banks about 0.8%. More or less a picture that you saw on the benchmark Nifty 50. Let's dive straight into individual stocks and let's talk about the accident of the day, and that is Bandhan Bank. They have guided towards slower growth or improvement in return on assets. They're saying that the external environment is not supportive. They could face pressure with regard to their lending activity going forward as well. 10% down at lower circuit. I wonder what will happen later in the day. You have Anthem Bio, which has posted a not so good set of numbers. Sagility also not so good. It's down about 4% or so. In fact, it's not on guidance, it is on results. Let's move on and talk about some of the good results. You have MPS that stood out to me, arguably the stock of the day so far. But remember, it's a small cap counter, and so therefore it could be reacting more on account of that. Just about 4,000 crore in the way of market capitalization. But Canada Robeco doing okay. Indian Hotels also had a pretty decent set of numbers, but the stock is seeing cuts of about 1.6%. JSW Infra, I won't be surprised if this one is also losing ground, but the volume growth was steady. The numbers looked okay, 2.3% lower at this point. I wonder if it will find buying later. Cyient DLM, they had growth in the aerospace as well as in the industrial segments. That is being reflected in the stock. Remember, this is a stock that has gotten beaten down in the past, so it's finding a little bit of favor right now. In other updates, you have Anantraj and the demerger of its cloud business, of its data center business, and it's in focus. Of course, that business is going to sit in a new entity which will subsequently be listed. The stock is up about 1% or so. Gabriel India, significant update beyond the earnings, and that is its plan to buy stake, but the numbers didn't look particularly good. So I wonder what the street is reacting to, the Q1 results or the fact that it will be buying stake in HL Mando. That consolidation in Gabriel India continues from the Anand Group. And CMEC finally is set to buy a vessel from Anant, or rather from HAL Offshore. This is CMEC Anant. If I remember correctly, the price tag is about $70 million. Not doing too much, up about 1% or so. Hira, I'm wondering if you're spotting anything else.
So nothing in terms of newsmakers, but MTAR, Kush was just showing it to me, and I think we closed India market closed yesterday with the MTAR because it actually got out of the lower circuits that the stock had seen over the last 2 to 3 trading sessions, and today now that stock is locked in upper circuit of 5%. So I think neither the buyers nor the sellers are getting any opportunity when you talk about an MTAR. A few of the other names, MedPlus, which is reacting to numbers, major pressure coming in on that counter as well. Pull up a MedPlus on the screens and you will see the 13 to 14% is the kind of cuts that you're seeing on earnings. Bharat Coking, again another newsmaker which is in focus in today's day of trade, along with the E2E network. We'll pull up all these counters and you'll see if you can just have a Bharat Coking, guys, and a E2E network. E2E network is locked in upper circuit. Sri Lotus, RR Cable, Kalyan Jewelers, a few of the other names which are probably reacting in trade today. So these are the stocks that we're talking about. But MTAR, I don't know if I should take a technical view, Kush, on this one as well.
No, please, by all means. Yesterday we spoke about precisely this key. panic mat karo. You don't have to go out and sell just because the stock's been hitting lower circuits for the last 3, 4, 5 sessions. There's been a good rally. So even if you look at it from that perspective, this was of course news based, but this was some selling, some cooling off happening in the stock. It's at upper circuit right now, like you rightly said. Neither the buyers nor the sellers, on depending on which side you sit, are getting an opportunity to do much. Don't do anything. If you have a position, continue to hold. I am looking positionally at 5200 to 5500 as that support zone. As long as that is held, I think the stock will perhaps go sideways, if not move higher from here. So not necessary to participate in every big mover, right? So you can sit out on MTAR Tech, continue to hold 5500 stop loss.
Okay, not bad on MTAR Tech as well. Trident, M&M Finance continues the up move in today's session. TVS Motors as well, 3.5%. Chandan, with the way markets have opened right now, anything that you're spotting that could be a good momentum pick? Because you're not seeing that kind of downtick in terms of individual stocks, barring MedPlus, Bandhan Bank. You have a Gabriel which is reacting to the acquisition on the downside, and a Westlife which is under pressure.
Yeah, so apart from these names, I'll give one more stock which is really setting the tone for next leg of rally, that is buy on Chennai Petro. In fact, now the counter is giving the breakout of consolidation of last 24 months, heading towards the highest level of 2024, which was 1275 and beyond. So here I'm expecting next leg of rally with support of 1265, looking for 1335 to 1350. The name which you mentioned, like the Bandhan Bank has seen a negative opening. The structure has gone below 50-day exponential moving average. So I believe weakness could be there. So selective private bank looks good. So Federal Bank or IndusInd Bank could be the name, can be counted in this territory. And in defense, which you mentioned, I believe some more volatile cues could be there. But if one has to focus on one defense counter, I'll be looking at HL with the view that it has given a consolidation breakout on the daily chart.
The Nifty Pharma getting punished today because possibly this tariff concerns in part, but also ahead of a whole slew of results. We will have to look at what the expectation is over there. Lupin and Ajanta looking interesting to you, Kush?
Ajanta for sure has been our weekly pick of a couple of months ago. This correction, this profit booking dip is a healthy one. I would be more inclined towards buying this close to the 3375 mark, 200-day moving average. So closer to 3300, 3400 zone you can accumulate. Lupin not so much. The volume action on the downside in the last few sessions has been, rather healthy, so discouraging, from any fresh picks. 20-day DMA also being tested today. So Lupin you could avoid. Ajanta Pharma constructive, 3375, 3400. That's the zone where you can actually look at buying Ajanta Pharma.
Come on, it's 1.2%.
We're just discussing in terms of, I said, see, pharma in the end, whatever it is, there has been a sentimental impact to an extent.
1.2%.
Do not worry if you are seeing a sentimental impact. कुछ नहीं होना है.
वो तो नहीं होने वाला है. It's Trump sitting there.
So Trump, because in 2 years, what will happen with Trump post November? What will happen with Trump does not matter.
He's probably going to need. Okay, I'm not going to say it.
No, I know, let's not
don't.
get there.
I'm not going to say it.
So, I don't think you need to worry about pharmaceutical companies from that perspective. I think this is an opportunity if you actually want to look at buying any of these pharmaceuticals.
I think one more name is, you're talking about pharma, we're talking about Bajaj Auto.
Pharma. Let's just round that up.
Bajaj Auto, allow me to talk. Pharma you can discuss.
I shall hand over the baton. Pharma you can discuss. देखो ICICI Bajaj Auto मैं टच नहीं करने वाला. No, so if today you would have asked me कि overall pharma क्या लग रहा है, looking at the index alone, there are 2 legs of negative divergences. मैं बोलता ठीक है रुक जाओ थोड़ा cool off होगा फिर buy करना.
This is before the.
Forget the news. I'm saying. There is no news. You can royally ignore the royal decree that has come out. Completely ignore. This is more a technical pullback.
I like that.
कुछ नहीं होने वाला है. Keep this buying list ready. And pharma में जो dip आया है, we've mentioned a few stocks. Buy them. Okay, maybe not immediately because अभी थोड़ा सा impact है. Once it settles, go out and buy. Like I said, Ajanta Pharma 3375. A lot of other stocks have that support levels.
Okay.
Buy.
And the whole market is also a little down today. Chandan, just a view on pharma very quickly because actually Bank Nifty is also turning fairly negative. But view on specific pharma stocks where you see an opportunity, and would you be worried about this whole tariff news?
Yeah, obviously, like I'm enjoying the discussion which you guys are having. So obviously, we need to worry from the Trump's tantrum, but I believe in pharma need to focus on the diagnosis lab and that sort of sector healthcare compared to only the company which are related to the US market. So accordingly, I'll focus on counter like Loras Lab and Apollo Hospital. And I think these counters can do well. So Loras Lab can be bought. However, it has really well, has been making high top, high bottom. But because of the market volatility, if it declines, buy near 1550 for an upside target towards 1600, 1620 kind of level. One stock I want to add here that is from the real estate pick is buy on Anantraj, given a classical breakout on the daily, weekly and monthly chart. So here I can add some view to get some momentum of 3 to 5% during the day. With support of 608, it can head towards 645, 650.
Okay. Anantraj in focus. You wanted to come in very quickly.
I wanted to tell Chandan something, and he said I'm enjoying the discussions that you're having. Chandan, trust me, the discussions are more fun when you're in the studios. So you are more than welcome, and your office is not too far, I know, right? You are more than welcome to come. There is enough and more seat on the table. So please join us here someday. It'll be even more fun. Trust me, the BTS is even more fun than the actual show itself.
I love how Kush, opening up the house. That's a great idea, Kush. I second that entirely. Okay, let's just put the focus on Gabriel. The auto anch major has announced a trio of key developments, their June quarter earnings, strategic acquisitions, and a capital raise of over 1800 crores. Puneet, a trio of key developments, their June quarter earnings, strategic acquisitions, and a capital raise of over 1800 crores. Puneet, the stock now recovering from the lows of the morning, but the street's not too happy with this slew of announcements.
Well, it says another, step of integration that the company is doing. So, a context that last year 4 unlisted entities of the group, of the Anand Group, were merged into the listed Gabriel India. Now 2 more are expected to come through. One has been coming through from Anand Group itself, and hence I think the dilution of equity might be one of the key reasons that the street is slightly more negative at this point of time. But you have the con call at 11 a.m. so a lot more discussion will be done on Gabriel at that time. But as you mentioned, the results largely in line with the estimates. I think 15% growth we were expecting in revenue, but margins have fallen. But I want to focus on those 2 business transactions that the company has done. One's with HL Mando, which is a joint venture with Mando Corporation, as well as with Anand AIPL, basically, which is the promoter group's investment arm, and that is getting merged into the listed arm now. So Gabriel India essentially will be purchasing a 28.99% stake, and they will be paying roughly 2,200 crores to the promoter Anand Group. Now, this will dilute the equity most certainly, and I think that's why the initial reaction. 1,800 crores of that will be paid through share swap. So the promoters will get Gabriel India shares, and that will be one of the key transactions. Roughly 350 crores will be paid by cash for this one. And the second key transaction is on HL Klimov. That is, of course, into the ADAS system, and it's a big development on this aspect because this is a very new sector for the company, not in the listed space. And you have the new the PV side of things with the electric vehicle evolution, a lot more focus on ADAS. So this will be another key vertical that will get added.
Puneet, in 10 seconds, why is the street unhappy with all of this?
I think one reason which I mentioned was the equity dilution, because 1,800 crores will be coming through. So that is one. So I think some clarification on that.
That's the downer there. Okay, we'd love to speak with the management of Gabriel. You're most welcome to come and speak with us on NDTV Profit. All right, thank you for that, Puneet. Thank you, Chandan, for joining us on this leg of the conversation. Kush, thank you so much as well. We're going to request Parag Thakkar to stay back with us, because if there is one person who should be part of our HDFC Bank debate, it is Parag Thakkar. But before we start off that conversation, let's tell you what's happening. Slower growth, margin pressures and governance concerns are raising question over a stock which was once the market favorite. Is HDFC Bank losing its sheen? The stock is the worst performer in the Bank Nifty index this year, as concerns are raised over the ability to regain its premium valuation. So Amit is here with several key questions and insights.
Well, if you look at the HDFC Bank share prices, so far in 2026, it has declined by nearly 23%. It's the worst performing stock in the Nifty Bank Index and the worst start that HDFC Bank could have seen since 2008. Now, here's a table of how the calendar year performance has been for HDFC Bank right from 2008. In 2008, it had declined 42% so far. Then there have been continuous gains of around 71%, 38%. As you can see in 2011, 59%. It has been coming down a bit in the last few years. Since 2020, 13% gain, 3%, 10%, and right now it's down 23%. It's worst possible start that we could have seen since 2008. Now, why is this happening? And firstly, why is it important? Because firstly, and the importance of HDFC Bank from a retail investor perspective, it's 100% owned by public. There are 45.3 lakh shareholders, of which 44.4 lakh are individuals, which means that this is excluding the mutual funds and the foreign entities. Apart from that, mutual funds own close to 30.6% stake in the company. 59 mutual funds, or AMCs, are owning shares in HDFC Bank via various schemes. And this is the most interesting part here. The value of the mutual fund holding in HDFC Bank stands at close to 3.1 lakh crore rupees, which is nearly 8.3% of the total equity oriented scheme AUM and nearly 3.8% of the total mutual fund industry AUM, which also includes debt, arbitrage and AIF. So you can see the exposure that mutual funds and retail investors have towards HDFC Bank, and that stock is down nearly 23% so far in 2026. Now, why HDFC Bank is losing its sheen? Firstly, there has been a moderation in loan growth. Now, they have been doing this to improve their balance sheet metrics. Apart from that, the funding mix change has also led to a slowdown in the company's profitability. There has been a continuous decline in low-cost deposits. Margins have been range-bound. In fact, they have been on a declining trend. Yield on assets have been on a downward trend for the last 5 years. And in 2026, there have been a corporate governance issue post the chairman exit. And also, there is no clarity so far on the CEO reappointment currently. And hence there is no clarification on this. We have also tried to see how HDFC Bank has performed under Shashidhar Jagdishan. Okay, we do not have the table so far, but if you compare it with ICICI Bank, then the performance for HDFC Bank has been a bit muted compared to what its peer or the second largest bank in the country, ICICI Bank, has done. And that could also be one of the reasons why the stock has been underperforming.
Yeah, very interesting. All right. Thanks so much for that detailed presentation. You can't overstate the importance that this one bank has to the Indian investor, because even if you're investing in a Nifty 50 index fund, you've got a pretty sizable allocation towards it. The question though is, under the current management, could things have been done a little differently? And we've got Abhizar Divanji, founder of Neostrat Advisors, joining in to talk about some aspects of this. Parag Thakkar, of course, with us in studio. Good morning to you, Abhizar. And more from the perspective of what this bank, which means so much for the investor, and indeed the significance that it has purely by way of its lending book. Could they have done things differently over the course of the last 3-4 years?
I mean, sitting in a studio, we can say that, Alex. But the reality is that HDFC has been through a merger of a disproportionate size. And ICICI had the same issue 2001. However, in 2001, there were favorable markets and cheaper interest rates. ICICI Bank would have fallen under burden of their NPS at that point in time because the DFI had NPS. HDFC Bank is falling on the burden of lack of deposits. Now, if you just look at the larger issue, these mega bank merger, and of course, HDFC is multiple size of what ICICI was in 2001. So, if you look at it, this merger will take an elongated period of time to stabilize. And the reason why it will take that much time to stabilize is, one, the size is much larger. Two, we've had a huge issue on deposit runs, as in deposits moving to the capital markets. Three, the interest rate cycle has gone up. And in an upward interest rate cycle, to integrate a non-bank into a bank is a huge challenge. So I think that there are macro factors that have played a role in terms of HDFC's stability. What HDFC is doing right, in my opinion, still, is the fact that they are not trying to do aggressive borrowings on the wholesale market to be able to fund a increased loan growth. In quite the contrary, they are saying that unless the deposit franchise picks up, we will slow on loan growth. That's what I've heard in the discussions. That's actually a good banking strategy, because clearly from a bank perspective, the cost of funds being significantly lower is the single largest advantage that institution or a banking institution ever has. So ideally, to retain that franchise, now, has the bank done enough or could have done better? Of course, it could have done better. Could it have done the same kind of NIM expansion that ICICI did in terms of offering a wide range of services outside of plain banking? Of course. Could it have increased fee income like a Kotak's model has always been? Of course. Kotak's NIM has, even though it's fallen, is still the largest. Why? Because there's a reason. They have embedded fees into it. They've embedded other kind of services that they provide along with it. So ideally, should the bank have transformed from being a plain vanilla lender to a structured provider of capital? Yes. But I think that will evolve over time. So in a sense, I don't think the franchise has deteriorated. I think the franchise will come back. The other big peril that we have is if you're part of a lot of indices and if you're part of a lot of mutual fund holdings, then the flag comes with it. So I guess
I think that is Abhizar, I think you hit the nail on the head. The reason for all of the concern is that the element of choice of going out and choosing and investing in HDFC Bank specifically is lower down when you have so many investors who are in SIPs who may not have seen what the components of their are, and they have exposure to HDFC Bank one way or the other. And then comes the question of leadership. Now, a lot of this is being pinned on the head of the current CEO at a time when his extension is due. So let me ask you point blank, how much of this is a leadership issue? And would it have been any different if someone else is leading? Will things change if there is a different leader? Because it's all becoming about one individual right now.
So I think HDFC is much beyond an individual. It's an institution by itself. I think it has churned the best leaders possible. It's had one of the things that I would like to highlight is the fact that when you have a elongated leader for an elongated period of time in any organization, the second level tends to always suffer. So really we actually sometimes will lose a generation of bankers in between, and that could be true because HDFC has seen a lot of their bankers move to other banks. So there is sometimes a leadership vacuum, and then of course if a leader is overbearing, then what happens really is that the juniors tend to have more time, tend to take a longer time to evolve. So I do think that yes, when you start comparing, you compare an Amitabh Bachchan to an Abhishek Bachchan, then obviously you will see an obvious comparison issue. But at the end of the day, you got to move out of that.
Abhizar, I'm sorry, I must ask, who's the Abhishek Bachchan and who's the Amitabh Bachchan here?
I think it's very obvious to everybody.
Okay, so Aditya Puri and Shashidhar.
But that's the whole thing. So when you have a transition, you cannot get biased to what somebody else could have done. You have to look at it what the individual can do in the respective thing. I'm not saying that the individual may not have flaws or may not have erred. Of course he could have erred. But then so does every other CEO.
I think it's also not just become about the weight of expectations. Now it's become about performance. And Parag, I want you to come in here because you were one of the early and very clear backers of HDFC Bank. Recently in your commentary, you have said that you are favoring ICICI Bank more. But then, this is a complicated subject because part of it is corporate governance, part of it is corporate performance, and then there is this leadership issue overall. What do you think has cheesed off investors? Because that's the only way I can put it. Well, the excitement about HDFC Bank has waned.
So what has cheesed off investors is that, of course, the stock price not going up, definitely, right? And that has reasons. The reasons are simple, right? As he highlighted very rightly, that the merger was too large. And after the merger, if you remember, RBI governor tightened the liquidity in the system to control inflation, right? So when you need liquidity, the liquidity was tightened. And interest rates started moving up, and real interest rates also started moving up. So that 1.5-2 years got wasted in that process. After that, now what you are seeing is that for example, first of all, one thing is that every individual cannot be same, right? Bakshi ji and his team has delivered a phenomenal performance in spite of all the issues, and they've navigated everything so well. And everybody cannot be like that, right? And so that is one different. But coming back to HDFC Bank, I feel, as he also pointed out, that there is no problem with the institution. It is not that they have landed irrationally, right? It is not that they have lost their deposit franchise. It is only that some things have not gone right for them, and some things which they have chosen themselves. That, for example, to grow corporate lending and to not grow retail lending after COVID aggressively. Because they took the call that retail guys will suffer after COVID. While ICICI Bank took a call that no, even during COVID, if people have repaid me, I can put trust on Indian common man who's actually cash flow transactions they know, because they have that account in their on this thing. So, and plus they have taken advantage of all that no, even during COVID, if people have repaid me, I can put trust on Indian common man who's actually GST coming in, UPI coming in, so more trackable cash flows of customers, and so they have gone ahead and landed at a rate which was making sense in terms of profitability also. That's why you see, for example, this quarter NIM, ICICI Bank at 4.27 x of tax refund, and HDFC Bank is 3.26, huge difference. Right now, HDFC Bank, in all, I would say it should bottom out here. The margins, FC NRB deposits coming in August and September, then their borrowing as a percentage of total book reducing. All this will come, but they are long-term levers.
So, Parag, my question to you in terms of HDFC then is, are you only talking about the non-financial overhang? Because if you talk about the retail business, it's half the rate in terms of growth versus what the market is. Forget ICICI, even if you look at the overall market, right? So that is a structural story which they have chosen as a strategy.
Yes.
But when you're talking about the leadership issues that everyone is citing, and if you have to tie that up to the valuations are very cheap right now for HDFC.
Very cheap.
Correct.
And on FY28, for example, the book value is 450 and subsidiary value is around 130.
Right.
Today's stock price is 760. So 630 you are getting bank for a book value of 450.
Yeah.
So it is 1.6 actually.
No, so my question over there is, at a time when HDFC had an ROE of 16, 17, that's when it actually demanded and commanded that premium, right? Right now we're talking about 13, 14 percentage kind of ROEs. Do you think once this overhang from a governance perspective is sorted out, that's when HDFC probably can become a re-rating candidate? Are you seeing any signs of that where it can command these kind of multiples yet again?
So I'll tell you first market is a slave of earnings. So I would say that when earnings will come, when margins will improve, stock will automatically go up. When that can happen, I think over next 2 to 3 quarters. Second is, I strongly feel that there is no governance issue, and so that is my personal view externally.
The problem is the perception of it right now.
Perception.
See, if it was as simple as it started with the chairman maybe getting into territories he shouldn't have when Mr. Atanu made all of those comments, then it died down. But if the numbers had withstood, then all of these questions would have been put to rest.
Yeah, that I completely agree. So that is how. So the numbers, if numbers would have come, stock would not have fallen so much, and there will not be so much of noise. But whatever has happened after the chairman resigned and all those things, I think that kind of you can say 10-12% de-rating due to that is external, which I feel that was not required.
I just have one more question, and this is for Abhizar. Abhizar, you've seen banks of all sizes, right? And we're talking about a behemoth after this merger. The question that I have is, when you had Mr. Puri at the helm, a lot of people who have witnessed this bank at that time got used to a 20% growth in the PAT on an ongoing basis. In fact, that became the joke, that they will always hit that 20% mark. With the size that this bank has reached of epic proportions, is the base their worst enemy going forward?
Yes, the base is their enemy clearly. But also what Parag said was very useful, that product diversification was never thought of in HDFC as a single lever. For example, they took a call that consumer spending will lower post-COVID, and obviously that call didn't work, but that's just a call. HDFC fundamentally has remained a mid-market, mid-working capital provider and housing loan provider. It has not tried to diversify beyond. So I think now is the time where I think product diversification would add to their base. Still, I mean, we are not behemoths at all in India, right? SBI is a bigger behemoth than HDFC. Any which way, globally, we are nowhere. So ideally, ability to grow, I think, is significantly larger. But I think it's the product diversification and the innovativeness that needs to come into banking. Today, they're so grappled with their processes, very frankly, Alex, that they'll possibly get the house right before they do anything else.
Okay. So, Abhisa, just quick one. Do you think there is a requirement for the management to actually come out and clarify in terms of the issues that they have, and that will solve the issue?
Well, I think they've been doing that. I think from a transparency perspective, you can't fault HDFC.
Okay.
I think at every stage they've been doing that. But yeah, it'll take its time. Very clear.
Okay, so that'll take its time. But thank you so much, Abhizar Parag for joining us for this detailed discussion, because gives us a lot of thoughts in terms of what's really happening from a financial perspective, from a governance perspective, and where does the bank stand versus its peers as well. But moving on, India's pharmaceutical companies are expected to report another steady quarter, with domestic demand actually continuing to offset the weakness in the US markets. Now, this is what the expectation is from the earnings perspective. But to add to this, what is the kind of impact as an analyst that Vishal Manchanda is looking at when you talk about US tariffs? That's what we're going to look at as well. Let me get in my colleague Varsha to join us with more details. And we have Vishal also. Vishal, please hang on till Varsha just sets this conversation up for us. Varsha, over to you.
Well, companies, pharma is expected to report 7 to 15% of growth in Q1 FY27. There will be a good India growth perspective, but US may have an impact. Now, India business is expected to remain strong. Weakness in the US market is likely to drag profits. Revenue growth is expected to stay healthy, but margins and PAT may decline due to Revlimid expiry and higher input costs. Talking about the India business, domestic pharma continues to grow in double digits, while US is expected to decline 9.3% year on year due to high base of Revlimid last year, lack of major new launches, and continued price erosion expected in the US sales. Margins are expected to be under pressure. If you see, higher raw material cost and freight cost is a concern, and absence of high margin Revlimid sales is likely to compress margin sector. Now, talking about the CDMO story over here, performance is likely to be mixed across players. Let's see who will be the winners of this quarter. You have Zydus, you have Sun Pharma due to the healthy India and specialty and emerging market performance. Lupin will be supported by Talvaptan despite a big pressure.
Got it. Thanks so much, Varsha, for that. In the interest of time, let me jump straight across to Vishal Manchanda. Vishal, before we get into your expectations for Q1 from the pharma majors, and we've got a flurry of them coming through, let me first actually say good morning and thanks so much for joining us, and thanks for your patience. So let me ask you about these latest statements that have been made by Donald Trump with regard to the tariffs. And this is something of saber rattling that has taken place in the past, but it hasn't really found any favor. Are you looking at it that way as well? Something that is a threat but might not emerge?
Yeah, hi, good morning. So exactly as you said, I look at it the same way. It's more of a threat and unlikely to emerge, because I think it's a greater harm for the US for them to put tariffs on generics. And it may not be possible for Indian companies to kind of reshore production to the US, at least for the high volume generic drugs. It can happen selectively for the high value drugs, but not for the large volume drugs. And there is complete lack of clarity on what the tariffs would cover, whether it would also apply on the APIs, the final formulations, whether it would cover biosimilars. A lot of things need to be addressed, but unlikely, I think political legal challenges would make sure that these tariffs don't go through.
Vishal, before we get into expectations of the fourth quarter, the other question I have is, now 90% of the US market for Indian drug makers is, in terms of volumes versus the generic drugs. Now, out of this total generic drugs which are imported by the US, roughly 40% comes from India. If we have to break this down between the companies who are directly exporting from India versus the companies which have already have a manufacturing base in the US, do you see those companies probably seeing an upper hand right now?
Yeah, obviously the tariffs would go in favor of those who have a manufacturing base in the US. But ultimately, like what it will turn out is what things will happen is there's going to be massive inflation on generic drug prices. Because if you manufacture all what you need in the US, the prices would obviously go up for the generic drugs, and that's going to be detrimental for the masses in the US.
Okay, so if you have to look at the tariffs in one way and the expectations in terms of the sector as a whole, what are the key things that you would be watching out for? Because in 2026 already, the sector itself has seen a sharp run up by now. So do you think there is further moat to actually understand what the numbers will actually look like? Or do you think it's going to be a situation where the numbers probably will be good, but it's going to be like a sell on news kind of a strategy that everyone will look at?
I think the sector right now is like waiting for things to happen beyond the US. So US, as we know, is going to be weak this year, and then people will wait whether there are additional opportunities that can pan out in the US, or whether biosimilars can build out in the US, or probably companies can build their OTC business across markets and show better growth than expected. So right now, I think if we look at expectations, most companies over the next 2-3 years are expected to deliver either low single-digit earnings growth on the FY26 base, or probably even a decline on the base, unless they kind of deliver on something which is right now not in the numbers. And I think likelihood of they delivering something beyond numbers is less likely.
Okay. If I can do a rapid fire, Vishal, in the interest of time, if you will humor me, I will do my best to ask the appropriate question. So, between the cohorts of generics, biosimilars, APIs, and any other cohort in the pharma space, which do you prefer?
So biosimilars, I think, will do well in the next, say, 5 years. That's a large opportunity shaping up, and scarcity probably should drive some value there.
Okay. And in the cohort of stocks, which ones do you like and which ones are you likely to see a negative outlook for?
So anything highly dependent on the US for their earnings. So anything above any company that's 40% plus dependent on their earnings for the US market, I would stay away from those. And also to qualify, US generics market, not the US market as such, but the US generics, small molecule generics market.
Yeah, okay, so rapid fire. Thanks so much for joining us this morning. Pleasure speaking with you as always, Vishal.
Thank you.
All right. Well, let's jump straight into earnings. And despite a seasonally weak quarter, Sagility has seen a healthy AI-led healthcare business demand, while the company continues to add clients amid several deal wins. We've got Ramesh Gopalan, who's the Group Chief Executive Officer and Managing Director, joining in to help us understand how the quarter has gone by and what the outlook going forward is. Mr. Gopalan, thanks so much for taking the time and for speaking to us on NDTV Profit. Let me start by asking about a Q1, which is, and it's traditionally been a bit seasonal, right? So is that the reason why you saw the numbers that you did see? And can IT services sustain that 5+% organic CC growth?
So thanks for having me on the show, right? You're right. Q1 is a seasonally low quarter for us. So if you compare growth more on a year-on-year basis rather than a Q-on-Q basis, we posted a very robust 14.9% organic constant currency growth, right? So that's a significant growth, and that's broadly in guidance with the low double-digit growth that we've projected for the full year. Yes, on a quarter-on-quarter basis, the numbers were down. But if I take out the seasonal revenues from Q4, we still posted a 5% Q-on-Q growth on the non-seasonal part of the business from Q4 to Q1. So overall, a pretty healthy growth on the top line.
Okay. So, good morning. This is Hiral on this side. If you could help me understand, if you have to look at FY27 as a whole, what is the kind of trajectory that you have? What does it tell you in terms of the action plan for FY27 and the guidance going forward?
Yeah, like we we gave a guidance at the beginning of the year in low double digits, right? So we continue to maintain that guidance. Given our robust growth in Q1, we are very confident that we can maintain the same trajectory, which means the overall year will also pan out in the double digits. But closer to the end of Q2, we'll have a much better idea, and we'll narrow the range. But at this point in time, we're still sticking to the double-digit growth guidance for FY27.
Specifically on CareSeeds, Mr. Gopalan, what is the kind of revenue contribution that you foresee for FY27? What are the trends that you're witnessing there?
Look, CareSeed is about a $6 million revenue business. So it's not going to make a big impact on our total growth numbers for FY27. But having said that, the capability that they bring to the table, which is around quality management in healthcare operations, as well as the 26 additional clients that they bring in, is what we are very bullish on, right? So given our service portfolio added to CareSeed's technology capabilities in the quality area, we believe that there is a good amount of cross-sell that we can bring to those clients. And over the next couple of years, we can grow those clients from where they are today.
Then my question is, how much of the FY27 growth, Mr. Gopalan, will come in from existing clients versus your new client addition? And has that strengthened versus what we saw in FY26? That's part one. And two, your healthcare payers in the US are also facing some bit of cost pressures and regulatory changes. So are you seeing any shift or slowdown in the client decision making, or even in terms of the discretionary spending?
So yeah, the first answer to your first question, traditionally our growth has been pretty robust from existing clients, and it will continue to be so, right? So if you look at our historical growth, almost 80% of the growth comes from existing clients, and we'll continue that trajectory. Like I said, CareSeed will add to our numbers, but it's going to be a very insignificant amount, at least for FY27. To your other question, yes, healthcare payers in the US continue to face cost pressures. Their medical utilization is still a concern. And so most of them want to reduce their costs going forward. But having said that, and I've mentioned this before, we don't play in the discretionary spend space. We handle core operations for clients, which is non-discretionary spend, which is something that they need to spend every year. And so this is why it's a tailwind for us. When they're under cost pressure, they need to find opportunities to take out cost. And that's where players like Sagility come in and help our clients take out their operational cost. So while, yes, overall there are profitability concerns for our clients, that opens up a lot of opportunities for us.
Okay, very interesting. Mr. Gopal, I'm just trying to understand now, a lot of companies like yourself are providing services and packages that sit with artificial intelligence, right? It's baked into the product that you are selling. Yes. And so what I'm trying to get at is, how does that change the nature of the deals that you're getting? Does it change the size? Does it increase the volume of deals that you can take on?
Yeah, very good question, right? You're absolutely right in the sense that AI is kind of embedded in the work that we deliver for our clients. And so the value proposition to clients today is, hey, give me a larger piece of the workflow, and let me use AI to reduce your overall operating cost. So what that means is we get a larger piece of the pie, we commit to outcomes to the clients, and we try and get a larger deal value as well as a longer contract life. In return, we commit to cost takeouts over the 3-5 year period. And so it's a win-win for both clients and us.
Okay, quick one on that. How much of your current revenue is influenced by this AI-led solutions, and is it helping you win larger deals? That's part one. And when do you actually see AI productivity actually give you material benefits from a financial perspective?
So let me take the second question first, right? So AI, like I said, AI and any other technology is ultimately to reduce the operating cost for the clients. And when we get into deals with clients, a large part of these operational efficiencies or savings will pass back to the clients, right? So while doing those deal constructs, we tend to return a lot of these savings to the clients while retaining a certain portion, so that we can continue to build and maintain those platforms and also improve our margin. So it is helps us stabilize our margins to a large extent while providing clients the cost takeouts that they are looking for. And to your other question, AI is today kind of infused in almost everything that we do. While adoption of large-scale AI is still in the works, the automation at a process level and at a minor task level is something that we are infusing across the portfolio.
Mr. Gopalan, leave us with one, maybe a 1 or 2 word answer, which is it's a brave new world, especially in your space. And so therefore, in a scale of fearful, optimistic or cautiously optimistic, where would you sit?
Look, in our space, we are very optimistic because AI will help us take cost out. And that's exactly what our clients are asking us to do.
All right. Well, on that note, thank you so much, Mr. Gopalan, for taking the time, and wish you all the best in FY27.
Thank you. Thank you.
All right, well, it's been an interesting week so far, but I think it's going to culminate in the most exciting thing for us, right? Which is
the Business Leadership Awards and the winners, and meeting all of them under one roof and getting this property back after 14 years, which is the honor for all of us.
Yeah, the finance minister is going to be there, and she's going to be presenting awards to a whole host of Indian leaders that have really pushed the envelope this year, especially in the challenging environment that it has been. And there are some really interesting categories for you to look at, whether it is your top performing public sector banks or your public sector utilities or the top performing new age companies in the space. You'll find all of that.
The wealth creators as well. I'm sure all investors want to know which are those wealth creators, because that is the one who's actually made money for them.
Absolutely. All right. We have to slip in a very quick break. On the other side, we're in conversation with the management of Bajaj Auto. The stock is in focus today. Stay tuned for that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं
Welcome back to India Market Open. An interesting day of trade, everything centered towards earnings. And you have a Bajaj Auto which is raced ahead this quarter, actually delivering robust earnings, which is powered by the export-led business. If you see the stock as well, 3% up move is what you're seeing. Rakesh Sharma, Joint Managing Director at Bajaj Auto, joins in. Rakesh, welcome to the show. Always a pleasure to speak to you. A very interesting quarter right now if you have to look at the numbers, because volumes are strong, revenues are strong, margins have held up as well, in spite of everyone talking about the impact of West Asia crisis across industries, right? If you have to look at FY27, do you think it is still going to be the export business that is going to drive growth? Because the only concern that I heard from a lot of brokerages, a lot of investors is that why is the domestic business not firing to that extent?
Good morning, Hero. Yes, foremost, I must say that it was a very difficult quarter because there was RM inflation, there was supply chain disruption, there were logistics issues, and given our size of international business, these logistics issues do have a big impact, and it required the entire company to really come together. And for me, the milestone is really the various functions coming together on a very dynamic and daily basis to deliver a quarter in this environment, and for it to be record breaking on all parameters was certainly very confidence inspiring. I think the environment is going to remain volatile. I don't think that there is one crisis after the other. So we will continue to see volatility, but we have to learn to live with it. Exports, strong outlook based on the order books that we have and based on the assessments of our team. It's a strong order book. It is the African and the Latin American markets, part of ASEAN, have proved to be very resilient as an industry. And that's really very good news for us because we've got some excellent competitive positions over there. When you come to domestic, there is no, I would like to just frame the lens through which we look at domestic so that I can share that with you. We don't really look at domestic two-wheelers as one number because it's now there are so many meaningfully sized constituent parts in it which are behaving so differently that you lose a lot of meaning and understanding of the market if you just look at domestic. So, for instance, I'll tell you the two-wheelers are growing at 14%, but within that, electric scooters are growing at 70%, 100cc bikes are growing at 3%, 150cc plus bikes, which is our sort of key battleground, the top half of the industry, they are growing at 25%. The 125cc's are growing at 3 or 4%. So it is very important to disaggregate this and understand how it impacts us. Now, if I look at where Bajaj Auto is strongly positioned, where our management focus is, then I say that we've already talked about exports. That's very strong. 40% of our revenues are coming from there. We have a good outlook of hopefully breaching the 250,000 mark with very good profitability in the coming months. Then the second part is the electric business. We've got a good position in electric scooters. Remember that we got out of scooters in 2007. And then on the back of electric, we've come back into the scooter business and rapidly come to at least a number 2 position, sometimes number 1, but very, very close in the leadership stakes out there.
Yeah.
With double-digit profitability in the electric business. Then if you look at the electric auto business or the three-wheeler business,
yeah,
people don't, that's almost like 20% of our whole business. It's almost now rivaling the motorcycle business.
Yes.
And solid market position, tremendous growth in e-autos.
Sure.
They doubled, And finally, if you look at the 150cc plus segment, I said it's a 25% growth.
Yeah.
We have now seen market share expansion, albeit at a small pace in Q4 and in Q1 in this segment. So, and it's also going to see a lot of action in terms of new product introductions, etc., from our side. So our segments, the one which we are really, really strongly focused on, seem to be having a really good tailwind for us to capitalize on.
Indeed, Rakesh. And good morning to you. This is Alex. And I think you've described all of these categories so well. But I do want to ask about the export segment from the lens of comments that you've made, I believe, in con calls, where you've said that if it were not for supply chain issues, the numbers in the first quarter could actually have been substantially higher. So what can you tell us about the situation on the ground as things stand right now? Because a few of the areas that you do operate in are volatile, even as things stand right now.
Yes, Alex, if you recall in the quarter which has gone by, April and May, we were besieged with a lot of manpower migration, LPG shortages, which sort of disrupted a lot of vendors and our own production. So April and May were very difficult months from that point of view. I must say those pressures have eased off. But at the same time, there is a lot of shortage of shipping opportunities. Bajaj Auto exports a container every 10 minutes. That is the scale of the operation. And we need 4 to 6 shipments per day. And the shipping opportunities have reduced. which makes this whole thing difficult. So I would say that we were expecting to reach the 1.5 million mark, but we could hit 1.4 million. So I would say yes, about 100,000 to 120,000 units were lost, mostly in exports, but also in our electric business, both three-wheelers and two-wheelers.
Rakesh, I'm going to just switch focus from the export to the domestic yet again. You spoke about the 125 to 160cc segment upgrades that are coming in as well. Now, if you're talking about the launches that happen in this segment, will that help the company regain the market share in the core motorcycle segment in FY27?
Yes, of course. But let me tell you, all these segments we are participating are core to the business. The motorcycle business is 20%, 25% of our revenues. So just to put that in context, if you permit me to roll back a little bit in the history, the thing is that when ABS regulations came in, we moved very fast in the market and brought in new products extended the Pulsar brand into the 125cc, which gave us a very good market share expansion for 2 to 3 years. But we also saw that by FY25 and in FY26, the end of product life cycle fatigue had set into the portfolio, which had slowed down the portfolio. And there was a weakness in the shares. Now, our first priority was in this segment, if I simplistically break it up between the 125cc, which is substantial, and the 152 to the 400cc subsegments. Then our first priority was to launch products in the 150cc plus segment, which we did after the festive in November, December. And if you see the outcomes on the basis of Vahan registrations, you will see there is market share gain in the 150cc plus segment in Q3 and Q4. 9 upgrades were put in place in the period of November to March. And they have given us a very good uptick in market share, confidence building. Now, as we go forward in the year, we are going to shift focus to include even product launches even in the 125cc segment. So not just upgrades, now going forward, we will have an absolutely new model, albeit under the Pulsar brand, in the 125cc, as well as in the 150, 160. And along with that, there will be around 8 other refreshes. All this happening in the next 6 weeks. So it's a hectic quarter from a product innovation part of it. So that would completely reinvigorate the portfolio, which was sort of at the end of its potency from, let's say, September onwards. And we are hopeful that that should, get us some gains in competitive position.
Okay. Mr. Sharma, very good morning. Tamanna here. I think right now the stock is a darling of the street. Everyone's very excited about the numbers, especially because of exports. But one thing which one should keep an eye on it is what is happening with your EV business. Now, I want to understand how you're thinking about it. Are you looking at EVs eventually cannibalizing ICE scooters? What is the kind of growth you're seeing there? And sorry, I'm bundling up all of these questions, but what is the split right now between two-wheelers and three-wheelers in your EV portfolio?
Well, first of all, we have always been bullish about EVs. We were amongst the first to put in an EV scooter way back in 2020. And I must say, it was at a considerable loss at that time. But the company was backing up the development of the EV segment. And of course, with the increase in gasoline prices, those are always a very strong trigger for shift from petrol to gasoline or conventional fuels to electric. And that's what we are seeing. So the industry is going to be strong. Already, electric scooters are 25% of ICE scooters. So it's substantial. We certainly think, based on the, again, operating economics, this trend will continue over the next period. And we are very happy with it because we were out of scooters. We had decided to step out of scooters way back in 2007. Now, this gives us an entry back into this very, very important segment, not just in India, but also overseas. And that will happen as soon as capacities get unlocked. So we are, churning out about 50,000 units per month. We are unlocking capacity immediately so that at least we can go up to 60,000 and then investing in substantial capacity expansion over the next 12 to 18 months. Similarly, in three-wheelers also, in fact, the progress of e-autos, the electric vehicle segment in three-wheelers has been very, very spectacular. And today, e-autos account for about 40-45% of the L5 category, as we call it. Now, if you see there, we have got the widest portfolio, I think, with 12 models, which go from the humble e-rig right up to the very big three-wheeler with the longest range at an 18 kilowatt hour battery. So there are 12 models which are now there in that portfolio to attack this segment, which is growing big. And as the segment expands like this, several sub-segments and use cases emerge. And that is our whole strategy of being able to laser sharp attack sub-segments which are emerging as both these electric categories develop over a period of time.
So just a couple of quick follow-ups. You talked about 50,000 units right now, scaling up to 60,000 in about 12 months. What is the kind of output that you see on electric vehicles?
No, I said immediately scaling up to 60,000 in the immediate term.
Yes.
And then, we are being challenged on capacity in electric, in three-wheelers, and high-end motorcycles. So today our capacity is around 7 million units, and we want to take it up to about over 9 million units per annum progressively over the next 12 to 15 months or so.
Okay. I just wanted to get your sense on if you're seeing any impact of El Nino, patchy monsoons, demand at all in any categories right now, Mr. Sharma, because you're more likely to see a first-hand impact than anyone else and before anyone else. Are you seeing any signs of trouble there?
Well, I wouldn't be able to isolate it down to El Nino. It is still very early days and the monsoon is bringing some cheer in many parts of the country. But I must say this, that the bottom half of the market is really underperforming. In fact, it is very, very low single digit. And the top half, particularly, like I said, the 150cc plus segment, is growing at 25%. So it's a very wide disparity. And then if I look at it state-wise also, there are states which are in negative and there are states which are growing at 25-30%. So it is perhaps reflecting the structure or the distribution of purchasing power in our economy. And the environment is tough, but there are significant segments which are growing as if, there is no problem. And there are segments which are really underperforming.
On that note, Mr. Sharma, thanks so much for taking the time. We enjoy our conversations with you. Wish you all the best in FY27.
Thank you very much, Dalal. Thank you.
All right, we're joined now on Talking Point by Vikas Parshad, someone else that we really enjoy speaking with, and he's been waiting patiently by. Vikas, I wonder if you heard a portion of that conversation and the fact that Mr. Sharma at Bajaj seems to be quite confident and positive about the rest of the financial year. I think that bodes well for the automotive sector at large and, in fact, quite a bit of Indian industry. Would you agree?
I would agree. It's good to see you again, and this is a good place to start. I was in Bangalore last week and met a bunch of manufacturing industrial companies. Similar message to what Mr. Sharma was just saying from Bajaj. The demand outlook, especially at the high end, seems intact. The margin compression we were fearing seems not yet to have taken root. So we'll see how the rest of the year goes, but it's a promising start from the OEMs in this earnings season.
Vikas, good morning. Hiral on this side. So if you have to look at India as a strategy, you have been absolutely positive. My read is completely invested as well in terms of where India goes. So in this kind of a market right now, is it a market where avoiding the wrong stocks will matter more versus finding the right ones, number one. And two, if you have to own the right ones, what are the sectors that you're looking at?
I think that always matters. Active stock picking always matters. And given that we're fully deployed always, if we're buying something, we need to sell something. And we're very careful about what we sell. What is interesting since early March, actually since early April, since the start of calendar Q2, is how concentrated the outperformance has been in the small and mid-cap names, and how large swaths of the large cap universe continue to underperform or tread water. And this is perhaps not a surprise, as India goes to about 7,000 listed companies, nearly 2,000 with a market cap over $100 million. The IPO activity is coming back. We're encouraged by what we see. And so active stock picking absolutely matters, even in the period from the end of Q1 2023 to the end of Q3 2024, when the market peaked. And in 6 quarters, the market went up 60%. You could have added a lot of value by being in the 1/3 of the market, or the 1/3 of the benchmark that did underperform. And we're starting to see that again, is that if you look at the large cap private banks, some beats, some misses, largely treading water, slight bias to the downside. I presume we'll see the same thing in staples. We're seeing the same thing in oil and gas. IT services, expectations were low. The names are off the lows, but nothing very exciting yet. But you look off benchmark, and you're seeing names that are up 50 to 100% over the past few months, and I presume that will continue.
Guys, good morning. Tamanna here. So what are you finding interesting right now as this becomes a stock pickers market, as the broader indices continue to outperform the Nifty? What are the spaces that you are finding interesting?
If you look, Tamanna, at our portfolio, our top 10 holdings, the top 10 different sectors, we have healthcare services in the form of hospitals. We have exposure to dialysis also, advanced manufacturing in autos, auto parts. We have some telecommunications exposure as well, optical fiber cables. We've had exposure there. Where we are not allocating more capital and where we remain underweight is staples, IT services. And though we're not underweight collectively, the private banks, we are lighter in that sector than we have been in many years. That may change as the year goes by, but we're finding better value elsewhere. And it's the off-benchmark space that we think better represents where India is headed rather than where India has been. As I mentioned, I was in Bangalore last week. I was very impressed by the defense and aerospace companies that I saw, not just by the large order books, but by how they're managing working capital, how they're allocating their capital, how they're managing margins, and really where Indian companies are carving out niches for themselves, where Chinese players are not there. This question came up in every single meeting. Why are the Chinese not doing what you're doing? And it's because of the niches that they're operating in. And we're very optimistic about what we see in aerospace and defense in particular.
Okay. Vikas, though, I'm just wondering what you make of earnings, because obviously markets are a slave to earnings, and you've seen a few that have bucked the expectations, certainly, quite a few, if I may say so myself. But do you anticipate that will continue into the second quarter, when the disruption on account of the West Asia war seems to be continuing, at least in the form of crude oil prices, which are once again at $90 to the barrel?
Yeah, so there's two things here. Number one is stocks over long periods will always follow earnings. This is true in every market in the world, but it's especially true in India. If you look at the performance of the Indian market over the past quarter century, let's hold aside the last year and a half. From 2000 to 2024, this is the best performing market in the world. But the valuations were among the highest in the world. Why is that? It's because the earnings growth was amongst the highest in the world, and the ROEs were the highest in the world. So stocks follow earnings, stocks follow high returns on capital, and that should continue. Just in the last couple of days, what you will see is, what you have seen is the two-wheeler OEMs report strong numbers. The multiples are not low. You would not say that optically they are cheap, but look how they've traded. They've traded very well because the earnings continue to exceed expectations, and I do think that will continue, and that's what we're looking for. Our hurdle rate for India is in the mid-teens, and so if you can find companies that consistently grow earnings at above those levels, they should trade at premium to the market, and they should outperform the market. And conversely, if companies cannot meet that hurdle, and we don't think that they will in IT services, we don't think that they will in staples, then they should continue to underperform the market. And to address your point on energy, that was the second part of your question. High energy is not necessarily bad. It's the volatility in energy prices that when we speak to companies is causing them some problems. It's the inability to plan, to prepare. If I were to tell companies, or if companies were to tell us that for the next year we think oil will be between 90 and 100, that's much easier to manage than the volatility and the swings between 70 to 120 and then back down to 80 and 90. That's harder to manage. So we don't know yet where we'll settle. I would say, however, most companies have done a better job of managing margins than we had anticipated back in February and March.
True, true. And you're seeing that through a lot of Q1 reportage in India as well. Vikas, thank you so much for speaking with us. Always a pleasure to have you on. Vikas Prashad there, talking about the spaces that he's lacking in the Indian markets. Indian markets muted today. Just want to pull up the indices before we close off on India market open today, and taken a turn for the worse, under 24,000 on the Nifty right now, nearly 200-point cut there. And that is going to continue, right, with high Brent prices, etc., and not too much to celebrate. I want to look at the broader markets just before we wrap up, because the Nifty could also be a banks and IT story more than anything else. But you're seeing a similar pattern on the Nifty mid-cap 150 as well, taken a tumble in the last few minutes of trade. With that, it's a wrap on this edition of India Market Open. From all of us here and everyone who put the show together, thank you so much for watching. Stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit Business Leadership Awards, 26 July on the NDTV network. India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily use. Daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin above the $66,000 mark on regulatory optimism. BlackRock adds $161 million in inflows in Bitcoin. Tokenized stock market cap reaches $1.7 billion at the end of June month. And White House deal clears clarity hurdle. Firstly, the Bitcoin is above the $66,000 mark on regulatory optimism. Now, this progress on the US crypto legislation, particularly the Digital Asset Market Clarity Act, is boosting confidence in major assets like XRP and Bitcoin. Now, this renewed spot buying and derivatives activity remains a key monitorable. BlackRock's iShares Bitcoin Trust has added roughly $116 million in Bitcoin in mid-July. This has lifted the holdings to about 735,000 Bitcoins. And remember, BlackRock CEO Larry Fink says that the market looks more stable as US spot ETF flows have turned positive as well. A16Z, which is a Silicon Valley venture capital firm, they have stated that the market capitalization of the tokenized stocks has reached about $1.7 billion at the end of June quarter. Now this is up more than 5 times from $329 million a year earlier. Now this data showed growth mainly coming in from expansion in the issuance, with more than half of the market value coming from assets that were not yet on chain a year earlier. And lastly, the negotiators say a White House ethics package has broken the Senate deadlock. Now lawmakers are racing to assemble roughly 60 votes before the early August recess. This would give more legal clarity to the crypto ecosystem. And remember, this ethics package is tied to the Digital Asset Market Clarity Act. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. Largely looking at it, there's a sea of green coming in, Bitcoin up almost 2%, but even Ethereum XRP showing a good technical move. Looking at the support and the resistance, most of the crypto is seeing a good up move towards the resistance side. That range is $66,000 to almost $70,000 when it comes to Bitcoin. Now time to take a look at the crypto strategy for the day. Here's what's there to keep in mind today. The overall market outlook is still cautiously bullish, and remember, the US regulatory hostility is likely to end. Now the Bitcoin resistance range on the top of it is that $68,000 to $70,000. That's where the focus should be, and market is repricing the regulatory risk. So you should be watching out for two important things. First is, of course, a fresh capital infusion might be coming in institutionally, and volume spikes also might be there. Now as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxations, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
On Earnings Edge, we're in conversation with Puneet Chhatwal, MD and CEO of IHCL. It's been a strong set of numbers despite concerns of what geopolitical headwinds would do in terms of impact to the business. Mr. Chhatwal, let me start right there. What has worked and followed through in terms of the trends that you have seen so far from the previous quarter? Because this was one where we expected some extent of impact.
You know, we have been talking about it since a few quarters. The management has been driving diversification of top line by brand, by geography, and by contract type. So what helps us is that domestic remains very strong. Of course, Dubai was very weak versus what it used to be. London has not been very strong, but it's coming back now very strongly this quarter. Maldives has not been strong. So the impact was very well mitigated by the hotel business, especially in our renovated portfolio, our intelligent use of CapEx in Taj Palace, in Goa, in Taj West End, which has driven not just top line growth, but has also driven very strong margins.
And do you see some of these trends where you've had mitigating factors actually continue? Because one presumes that everything that you saw in quarter one in terms of the Dubai properties, maybe the Maldives properties will continue now, even as we speak, because that situation has not cleared yet.
That's one. And then on top of that, we have to add the, airline catering business. That's also a bit under pressure, was under pressure in Q1, remains under pressure in Q2. But having said that, the hotel segment on the domestic front is been very robust, as I said earlier. And the first 3 weeks of July have really surprised all of us. We are looking at a much higher growth in the first 3 weeks than we have seen in the entire first quarter.
Oh, and what do you think is driving that?
Demand on the domestic front remains strong. Iconic assets like Taj attract more business, higher, revenue growth index than other competitive brands. That's how we achieved an occupancy of 82%. Our new openings, our not like-for-like growth is very strong. We should be opening a hotel a week. I mean, approximately 55 to 60 hotels should open new this year. Very strong pipeline, and the mix in the pipeline is also very strong. So it's like 90% of the pipeline is capital light. So all that, when it adds up, should help us to keep delivering on the promise that we have made or what we have guided for.
So, give us a little bit of a sense on what the occupancies and room rates are looking like for the rest of FY27 compared to what you have seen, the data we have for Q1, and then you're seeing the first 3 weeks of July as well. Are you seeing occupancies remaining at these levels or trending higher? What about room rates? What is the outlook there?
Well, as I said earlier, it depends by brand. Taj remains very, very strong in its performance. Ginger is going from strength to strength in the last 3-4 years, so is expected to also perform very well. Actually, our growth businesses, which is Ginger, Ama, Tree of Life, and Cumin, should do at least a 25% CAGR. That's something we've seen in the past, is happening as we speak. Markets like Goa and many other new markets are performing very, very well, and we have a very strong presence in some of these markets. So Bangalore is doing very well, Goa is doing very well, Delhi has been doing well, and Mumbai is obviously at the top of the charts. So I don't see any change in drop in occupancy or in rate in some of these key markets. Actually, if I would look at it, from the point of view that we're going to have the BRICS summit later this year, we're going to get more business delegations in the months to come, post-October. We should, coupled with the wedding dates, maintain a double-digit RevPAR growth, although we have guided for 7 to 9. But it would be fair to say that at the moment, it's trending at a much higher level.
So you think we could see the 7 to 9 guidance for RevPAR growth actually being beaten on the upside?
Up till now, it is for the first quarter plus the first 3 weeks in July. We will see how we could, as management, provide new guidance at the end of this second quarter.
Okay, so there's possibility of a new guidance at end of second quarter. Talk to us a little bit, Mr. Chhatwal, about management fees. And, you've talked about this model as well. Do you see management fees growing faster than room revenue?
At the moment, it is. I mean, it's showing a 26% growth in management fees, and the room revenue is not showing 26%. I think it will keep growing because of the strong pipeline, because of the new openings. And also, as I said, some of the things, when they become normal, the fees that we earn in Dubai in dollars translates into a lot of rupees. At the moment, it is under pressure. So there is a hidden upside potential that we have from fees, especially coming from the 3 hotels in Dubai.
Is there a hidden upside potential from the air catering business as well? You mentioned a little previously in this conversation how it has underperformed. Do you see an improvement there, and in what timeline?
Absolutely. The new kitchen we have opened in Noida, then there is a new operation we're doing in Navi Mumbai airport. So they will stabilize. And we have all seen, Tamanna, that whenever there is any crisis, there is pressure on the demand, whether it's airline travel or hospitality, but it comes back very strong. My favorite example is it's like a plastic ball. You push it underwater, it's fine. The moment you release it, it comes back up. So I think both the airline segment as well as the areas that are facing the brunt of the crisis will come back very strong. Maybe it's another 3 or 6 months that is needed, but that upside potential is there.
For the last, I would say, couple of years, one constant refrain for the space has been that demand is outstripping supply. This is for your industry as a whole. Do you think we've reached the peak of that trend or a lot more to go?
Being in the sector, I would like to believe we have not reached the peak and the best is yet to come. But at some point, the demand and supply will converge because not much construction activity on the hotel front happened during COVID, and it takes 3 to 5 years to build new hotels. So whatever was under construction got completed, but the new supply hasn't come in the same fashion. I think India needs a lot of branded hotel supply. We are at only 200,000. That's equivalent of Dubai and Singapore in terms of branded hotel supply. So a lot needs to be done. We need exponential growth in number of rooms to cope up with the demand and to cope up with the new India, where businesses require you to travel to tier 2, tier 3 cities. You need more airports which are getting built. You need more airlines. So a lot of that is happening, but it just takes time. There's no magic formula to do it overnight.
Yeah. Just one last piece really about acquisitions and plans ahead, Mr. Chatwal. I want to ask you about Oriental Hotels. Is there any plan to increase a stake and make an acquisition from the promoter family that owns about 24.5%? I'm asking you upfront because this is the buzz that is on, and I think we have the opportunity to speak about it. As clear an answer as you can give us. Is there business sense to it? Is this something being looked at?
Simplification in a company which is in existence over 100 years is a part and parcel of any strategy. For some odd reasons, Oriental Hotels has been on the ticker of most of the news channel for last 7-8 years. It's a question which keeps coming every quarter or every now and then. I think we as a Tata Group company have been very good partners with all. If there was an opportunity to simplify, to increase our shareholding or to do anything else or growth within that company, we would always do that, and that's the board of that listed company that will decide what's the best step for it. But for some odd reason, this amongst all the other group companies, this one has created most speculations, but not now. It's ongoing for 7 years, as I said.
No, that's all right. But what is happening right now? So as I understand it, if there is an opportunity, this would make business sense for you.
Every opportunity that makes business sense, it's the job of management to go for it, be it Oriental, be it a new acquisition like Atmantan or Ank and Pride, or our recent openings in Frankfurt or the lodge in South Africa. So we keep working on all opportunities and to get things done which have been stuck for ages, like Bandstand. It's been stuck for 17 years, and it's now the excavations are getting completed. So we're almost 90% there. I think we'll work on that. I mean, I don't have a concrete answer to give you.
Let me contextualize it, because in December last year, the call was taken to exit Taj GVK. So I suppose that's why that interest has been spurred, that you're all in or you're not with the way that you're running the business. Just want to get a sense of what is the sense with Oriental.
Tamanna, we had a very good, and we still have a great relationship with the GVK group. We kept all the contracts, and that family at that point decided that they want to do something with hotel business for their own internal thing. And it was a good opportunity for us to exit with a minority stake and at the same time keep the contracts. That's the ideal world. From their point of view, it was also ideal world because they got full control of the portfolio. They are now the main promoter alone, and it made absolute win-win sense. And if something like this, and it did not happen overnight, there were discussions, that kept going on for a long time, and when the right moment came, things happened. Similarly, for Roots Corporation, we did. We bought out our partners in Roots Corporation 3-4 years ago, and we made it 100% subsidiary of ours. So that gave us the flexibility to do with Ginger what we have done. So as and when any opportunity comes, we will look at it carefully, cautiously, diligently, and do what we feel is the right thing to do, obviously guided by the board of Indian Hotels.
Well, that was the management, of course, of Indian Hotels. But welcome back to NDTV Profit. You're watching Ask Profit, and as we do, do start sending in your queries on the numbers that are flashing on the top of your screen. Very soon they will. And there you go, and you'll also start getting the landline number as well. You can call us for your stock related queries. But as the markets, we've actually slipped yet again below the 24,000 mark, so it's been a weak push, and we did see some recovery at just about a half an hour ago from that mark, from the lows of the day. But then again, we breached that mark, and that's visible in terms of the heat map also for the Nifty 50. So we continue to see some stocks like Bajaj Auto that reported good results. We didn't see too much of a reaction during market hours yesterday, but stock was up almost 2% at the start and now climbing up 3.5%. But bulk of the Nifty 50 continuing to be under pressure. Indigo, Cipla, SBI, Axis Bank and Max Healthcare are some of those which are under pressure right now. In terms of what we have seen on the sectoral heat map too, the banking index continues to be in focus yet again. Seen some pressure on the private banking index since the start of the week. Today though, you're seeing PSU banks actually taking the brunt. You're seeing Realty also taking the brunt as well. And the advanced decline ratio for the broader markets, before we start taking your stock related queries also, if you can pull those up. Now, over the last couple of days, we've seen a convergence essentially in both the advanced and the declines, a very crisscross kind of patterns. But the advanced decline ratio, if we can pull it up on screen right now, today has been a clear one where 3:1 favoring the declines right now. So that is the picture of the markets. But let me welcome in our guest now, Vaishali Parekh, Vice President Technical Research at PL Capital, and Sameer Dalal of Natwarlal and Sons Stockbrokers joining in now. Both of you, thanks so much for joining in, and a good morning to both of you as well. The first stock related query, and this one's coming in on M&M Finance as well as Poonawalla. Both of those reported results very recently. Satyan is asking about both those counters. He's entered it, M&M Finance at 277, Poonawalla at 348. So he's sitting on good gains on Poonawalla FinCorp. But Sameer, very good morning to you. Would you recommend him to continue holding both those counters in his portfolio? The results were decent from Poonawalla, of course, and we've seen those gains built on. Any view on either of them?
View on both of them. So M&M Finance, we continue to remain very positive on a long-term basis. They cater a lot to the rural segment, the farm segment, which sometimes does go through a bit of cyclicality, in the sense you have Q1 sometimes which can be a little subdued, and then once you have the season where they are able to sell their product, then you see the recovery is happening. Now for them, Q1 actually, which is supposed to be a weak quarter, has been fantastic. So for me, now if Q2 gets better, I think the stock has more potential to probably move up further. So stay put in it. I think the stock has a lot of room to move up over the next year and a half. Poonawalla FinCorp also, we remain constructive. They're growing the loan book very aggressively. They're well capitalized. They are diversified their book quite well. Yes, they do have a bit of unsecured lending and consumer lending. But, that is where they get their profitability from, right? Because those ticket loans, the interest on those are much, much higher. Stock has actually been on a massive consolidation if you look at it for the last 2 to 3 years, So a lot of the premium valuation has reduced. I'm not saying it's not still a little expensive, but we feel now the worst for them is over and the stock can probably move up over a longer term. So we say stay put in both of them.
Okay, all right. The next question that we have is coming in from Ravi, who is writing us from Vijayawada, asking about Jammu and Kashmir Bank. He's got around 2,000 odd shares at the levels of 185 and wants to know the technical targets on this one. Vaishali, a very good morning to you. I'll come to you on this one. What are the charts indicating for Jammu and Kashmir Bank?
Hi, very good morning to all of you. I think Jammu and Kashmir Bank is one of the banks which is doing very well. And I think the trend still continues to be positive. Near-term support can be taken at around 175 levels and look for a target of 200, 220.
And welcome to the show to you as well, Vishali. But the next question, and this one's a good one, coming in from Rajesh, who's from Hyderabad, wants to know about Sansera Engineering as well as Azad Engineering. Both those counters are actually flown over the last 3 to 4 months in trade and led by the aerospace vertical. But Samir, is it still advisable to enter either of those counters? We've seen a strong re-rating on both of them. Would you recommend Rajesh to enter either of them right now?
So, this is a space we actually haven't covered too well. We missed out on the opportunity, so I don't have a call on it, unfortunately.
Anything on the charts, Vaishali, that you can recommend? Because, again, especially Sansera has seen a massive run-up. Is it expected to continue?
I would say it's too run up and it's in quite a forward zone. So either keep a trailing stop loss or booking partial profit should be advisable at these levels.
Okay, all right. The next one that we have is coming in the pharma space. Prashant is writing in and asking about pharma names. He's saying that because of the announcement coming in with regards to tariff on generics, a lot of pharma names, are seeing a downtick in trade today. Any of these that look attractive, have value buying and can be entered at the current levels from a fundamental point of view is his question. Samir, I'll come to you. What would you recommend, Prashant, right now?
So value buying, no, but growth buying, yes. Yes, Donald Trump has come up with these tariff structures. After 2 years, there'll be 100, 3 years, will be 200. But Donald Trump is here for 2 more years. So hopefully, by the time we reach that phase, a government which is more, how do you put it, stable or less volatile when it comes to words, comes into power and reviews the situation without affecting the cost of medication for the general public in the US. That is our belief at this point of time, given what has just been announced on Twitter. It's not even, there's no official action on it. So having said that, we still believe that the pharma sector is here to grow. Sun Pharma continues to remain our top pick in that space. We think the branded generic side, which they're working on, is doing fantastically well and will keep growing. We also like Dr. Reddy's, which is got a few ANDAs filed there. And then in the mid-cap, we've always been seeing Torrent Pharma, but valuations there have now moved up quite a bit, unfortunately. So corrections in Torrent Pharma closer to maybe 4,200. I'm talking of a sharp correction because valuations have moved up so much. That might be a good stock to enter from a long-term growth perspective.
Got that view, Samir, and thanks so much for the detailed view as well. But the next question coming in, this one's on Paisalo. Viewer Lena from Bengaluru has been holding on to these shares for a while now. Wants to know, Vaishali, what's a near-term target that she can expect? She's asking when can he expect to reach 100, but what are you looking at the charts right now?
Well, time period cannot be defined, but I think the stock has done very well and given good returns. So continue holding, keep a stop loss of 66 rupees, and maybe 100 I think can go in this quarter. So I guess keep a horizon of 3 to 4 months and I think look for those targets.
All right, okay. The next question that we have is coming in, and this is from Rajiv, who's calling us from New Delhi. Rajiv, a very good morning to you. Go ahead, ask your question.
Yeah, very good morning, ma'am. Sir, my question is from Samir, sir, because this is regarding Sterling and Wilson. Now, it reached up to 250 and now came down again. Yesterday it was 205. So I bought at 250 shares at 207 yesterday. So what's the future?
Okay, all right, got your question, Rajiv. I'll take this up with Samir. Samir, there has to be a question on this one, right? I mean, the stock upward moment that Rajiv is talking about was on the back of order wins that it was seeing, but because of results not being up to the mark, it did see pressure in trade, right? What is your view now post Q1 earnings?
Yeah, absolutely. So the results are a little bit of a disappointment because execution didn't happen the way management had earlier guided. However, they've said that from Q3 onwards, because there were certain projects which didn't get started up in the right time, so it got delayed a bit, but by Q3 you'll see it coming up, and they have guided for doing an 8,000 crore turnover for the current financial year. So even at 8,000 crores, if we take the projections and do the numbers, we still feel the stock price should be at 350 in 1 year's time. Now, where the story and the real benefits will lie for Sterling and Wilson Solar, which I've explained a few times, is Reliance New Energy is going to be setting up 10 gigawatts of solar power every single year. I'm just saying, let's assume they can get even 30% or 40% of that, right? Of that 10 gigawatts, that's 3 gigawatts a year. Into 3 crores, you're talking of a 10,000 crore order coming to Sterling and Wilson on a yearly basis. Huge numbers that you're talking about. So for me, I think the opportunity is extremely large. This is a long-term play. You got to stay invested. Don't keep looking at it on a day-to-day basis. At least I'm not doing that. And whenever you get corrections like this, these are times to add on, which let me also put a disclaimer. I have done that yesterday. So I continue to remain very positive and think this is a long-term great investment to have.
You, Samir, it took about 7 minutes for us to get the first question on this counter, but got your view. Thanks so much for that. But viewers, as well as Vaishali and Samir, let's start taking the rapid fire round. First one's coming in from Thomas Matthew on Canara Robeco. He's holding 12.